Okay, good morning, ladies and gentlemen, and welcome. Today we are hosting the Digital Asset, AI and Technology Conference. I'd like to say a big thank you to everyone for coming along. This is, probably one of the, in doing what I do with Wholesale Investor, I'm fortunate sometimes to basically get the opportunity to delve into some of my passion areas. And since 2018, for example, the area of digital assets, actually going back to 2013, was the first time we worked with a digital asset company, and that was Independent Reserve. And I remember watching Independent Reserve do their actual do their meetings with investors in our boardroom at that time. And to see the success story they've become is something that we've been massively impressed by. Likewise, we were part of the seed round when it comes to Banksa, and also a lot of the different now digital asset fund managers we've also worked with right in their early days. As a company, we like to adopt, technology early, and then as part of that adoption, give education, introduce people that are actually, that we see some of the bigger thought leaders actually in the space as well, and then provide, and allow you, I suppose, to build your own investment thesis as part of that. But today, I said for the last 8 months, we've been talking about how right now is probably one of the most interesting times from an investor's perspective when it comes to growth, high growth, and then also on the other side, yield. Now today is all focused on the high growth aspect, the fun stuff, right? And everything sort of innovation related, we're going to be doing a deep dive of. And as it relates to, as I mentioned, AI, digital assets, and then also the technology elements related to renewable energy, medical device, and also life science. So for me, the intersection of these three areas is really creating a new layer of opportunity for investors. And whilst I said it's been such a weird time for the last 2 years in the innovation space, you can actually see the foundations forming in the area that really create the next layer of company. And inside of that creation of the next layer of company becomes an exponential opportunity. And that's really what I want to deep dive into on the AI component. So the outcome for us is effectively today's, we have two key outcomes that we're aiming for. Number one, to assist you in building your own investment thesis. That sits fundamental to us in how we actually think about it. We want you to walk away and basically get ideas from all the different conversations today. And then from that, you extract your own investment thesis and how you think that you're going to play it. Actually, I should say 3 outcomes. 2, we want you to get some sort of visibility and understanding about the trends that are taking place in each of the key areas, right? So whether it be, and I'll go through the panel sessions in a second. And then also, the other outcome that I really thought about is I would love that 2 years from today, 2 to 3 years from today, so when we're gathering at, another one of a WI event, whether it be something like this, whether it be an emergence, a venture in capital, etc., that we can actually look back at this period and see the difference in what it's made as far as where the price, for example, of Bitcoin will be, where the price of Ethereum, Solana as an example, where AI is at that time, etc. Because we've been really fortunate for the last since about July last year, when we hosted Venture in Capital, we sort of outlined some of the things that were going to take place in the ecosystem. And so far, you've seen that actually roll out. So now, to me, this is about taking it to the next level. Okay, so first, just while I'm waiting for my slides to kick off, as a first start, I'd love to say a big thank you to OKX as being a sponsor for the conference. And just as you know, like these events do not happen without the sponsors, without the participating companies, etc. So throughout today, I'm going to encourage everyone to go and make sure you take the time to have a chat with them. OKX is probably one of the bigger brands when it comes to digital assets globally. And many people don't know they've actually recently set up and established an Australian office to facilitate, obviously, the trading. And Australians being such a big adopter of digital assets, it's a perfect platform to partner for this event. And they've got their trade table just outside. And then also you'll hear from BetterX, which are really helping wealth managers and traditional financial institutions help their clients get access to digital assets as well. So today we've got an incredible keynote speaker lineup covering a range of different areas. So firstly, going from Tim Trumper. Now, I've known Tim for 15 years, and Tim is the absolute thought leader when it comes to data, when it comes to AI, and it comes to all areas in this. He's got the incredible, like when you think about people that get the opportunity to have a helicopter view over what's happening, that is Tim, right? And I find that in the time that I've known him, Tim has this ability to basically give one-line statements that just sit inside your soul that you cannot forget, and then you see it ultimately sort of play out. And you'll hear it in his speech today. And I said, I've been fortunate enough to have several conversations with him about sort of AI as an area. So he's gonna do a presentation to start with, and then I'm gonna do a Q&A with Tim as well. Then we've also got John Sharp. I said, he was the first one to actually bring to me, the area of sort of what does AI look like laid out across venture capital. And then they went and explored billions of different data points and reference points about how they were actually going to approach their venture investment fund. And John has taken that to an incredible level where now he's probably he's renowned, globally, for what they've been able to do, and their actual fund itself and their approach of doing it is award-winning. We've also got Michael Langford from Google. It's for us to get one of the bigger players in this space to come and talk about what's happening in AI, to me, I'm really grateful for. So Michael will obviously be talking about how the sort of intersection of AI and then obviously software, and also what some of the initiatives are at Google and how they're rolling it out. As a company, we've got most of our infrastructure that sits on Google, whether it be sort of from a hosting perspective, from our platform perspective, but also the business as well. You can really see how the infrastructure they're inserting into their actual business is helping create effectively an exponential layer of opportunity for companies. So he'll cover that. And then also on the digital asset side, we're very fortunate enough to have Ben Simpson, who's funny enough, was presenting at one of our events 2 years ago, when he's sort of raising capital for his own venture. He's become now renowned as one of the sort of strategists when it comes to investing into digital assets. Often when we do these sessions, we want to talk about sort of trends. What I really like about Ben is one of the hardest things about crypto and investing in crypto is the emotional aspect that goes along with it, right? Both through the ups and through the downs of the cycle. He's one of the specialists sort of in that area that's sort of encouraging investors and helping them sort of understand that. So let's see if I missed a slide. So the key panel sessions for today, obviously the AI investment trends, that's going to be taking place at about 11:30. For me, that's a fun deep dive. Like, what does the actual future startup look like? What does the future business look like? Tim's going to be exploring what does the future board look like? How are decisions going to be made going forward? For me, I want to explore what are AI agents. If you haven't been sort of following what's happening, AI agents, as much as AI itself or generative AI has created a transformational aspect across many businesses, AI agents becomes the next level for what comes for companies, and then likewise enterprise memory, across companies as well. And the interesting thing is, when I talk about that future startup, it also has the potential to massively lower the cost base for future startups, but also still provide that exponential opportunity for a lot of companies. So then we'll be delving into the digital asset investment trends with a combination of, the likes of sort of fund managers and investors, and also from the exchanges themselves. For me, whenever I do those panel sessions, I love getting those two perspectives, because one gets to see perspective of what's happening from a trading perspective. The other one is from the investment perspective as far as what they're actually investing into and why. And then for the first time, I've taken a slightly different approach, where we've actually added to the lineup the emerging digital asset trends. And the reason we've done that is because I find with every single digital asset boom, what comes along with it is effectively new technology initiatives, also new business models. And for example, DeFi, has been an area which has been quite prominent now for the last sort of 3 to 4 years. How is that rolling out? The layer 2 solutions helping with solving some of the challenges of scalability, right? The solutions around interoperability between different blockchains. How is that actually making a difference? Because the reality is, all of us know that whether it be in financial markets, whether it be in logistics, whether it be in whatever areas sort of rely on trust as a basis, there's an incredible role that can be played by digital assets and by blockchain. So we want to sort of cover those areas as part of that session and do a deep dive as to what the trends are for this current boom market that's obviously been going sideways for the last few months, but it's still technically in the sort of boom in the boom market. And also love to get the perspective from the different investment managers as far as when they feel that we sort of head into what Raul described as the banana zone. So that will be the sort of topics that'll be the panel sessions for today. And then also we've got some incredible companies presenting as well. I'm going to do my best to go through all of them. Now, when I do this, I sometimes miss one, so if I miss you, I apologize in advance. As I mentioned, we're starting off with brightest as an example. As I said, when I first come across their model, they're really just trying to assist financial institutions and wealth managers help their clients get access to digital assets. And I think that's such an important role as part of the adoption part, given it's still very early in the adoption aspect. We've also got Fracstore Australia, which is basically helping their licensed model. They're working from Singapore, where they're tokenizing real estate assets. Now, as far as one of the areas where there's actually been a surge of activity in this, that's obviously been a key space. So Fracstore will be covering their presentation. We've got Bell Resources, which if you think about, and this was actually Tim that put me sort of onto this area, with the growth of electric vehicles, obviously then becomes a need for the layer of infrastructure around that. And Bell Resources are taking on the EV charging station infrastructure as part of it. Then we've got our keynote from John Sharp. We've got a really cool presentation from Enaxium. I'll just keep it really simple. One of the biggest costs associated with data centers is electricity. It's about 50% of the cost. So their technology is helping data centers effectively bring down that cost with it. And so we've got Tia who's going to be educating you on what they're doing at Enaxium. Also we've got Rapid Response Revival. You know, it's a very famous story about Kerry Packer when he was in an ambulance and he just happened to be in one of 3 ambulances in the country that had a defibrillator, and then he went and bought defibrillators for everyone. Well, Rapid Response are actually doing that, where you can buy your own personalized, you can buy your own defibrillator for at-home purposes. Brain Vector, how can you utilize AI for mental health, right? If you think about it, one of the biggest issues right now, and it's really taken place since COVID, is the issue of loneliness. And so, you know, Brain Vector are taking a very novel AI-driven approach to mental health with their solution. And also we've got DSG, once again, in the tokenization of real-world assets. You know, they've come over from New Zealand for the event. They're going to be laying out what their business model and their opportunity for their company. Also, we've got Sustainable Fashion Ventures. Pumped to have David here. I've known David for a very long time. Do you know that every single day, 50% of the world's population is wearing jeans? And yet the way in which they make them is actually quite unsustainable and very well known in the industry to be quite unsustainable. So David's going to have a presentation today about their novel approach to sustainable fashion, and specifically in the denim area. LBT Innovations, they're ASX listed, so you can check them out. You know, they're taking how would you utilize AI across life sciences? This has been a topic that I've wanted to cover now for some time. So LBT will be talking about how they're doing it with their business. Forsense Technology, they're utilizing AI for discovery, right? Now, the best way to say it is for utilization of AI for movement and pattern awareness. And they've got some very significant blue chip contracts. You know, there's obviously a myriad of ways to utilize a technology like that. Biosignals Diagnostic, once again, a personalized solution for people that have got heart issues or have issues with arrhythmia. They can effectively use a clinical grade device to see if they actually do have arrhythmia. And as someone that's had a son that's had issues with arrhythmia, you can understand the importance of knowing whether you're actually in an arrhythmia episode and then the actions to take from that. Empress Capital, probably one of the first AI-focused VCs in the country. You know, very fortunate to hear from Yash. And then With Wine. And at first, when I heard With Wine, I thought, oh, it must be similar to, you know, sort of online ordering aspect. What's really interesting is they've taken very much the software-driven approach to what the future of actually ordering wine looks like. And when you actually see their model, very clever, highly scalable, and said it has nothing to do with them owning wine. Very much software-driven in how they're approaching it. Zeo Sustainable Materials, basically taking waste materials and actually converting it into high-value building products. Then we've got Mine, and we'll be finishing with the future startup presentation from Michael, and obviously the emerging assets digital trends panel session. So I did my best to cover every company that's going to be presenting today. So that is it from me. Now, what I'm going to do next is I'm going to introduce Tim Trumper. And I said, Tim is probably one of the people I respect the most. When I think about someone who's established a career for himself, where he was a deal maker, bringing together bringing together Channel 9 and MSN as part of the packers in the very early days of technology, right through to being a board member of Quantium, which is one of the leading sort of big data consultancy and firms in the country, with some of the top tier clients, and which was acquired or half acquired by Woolworths as part of it, and sits on the board of NRMA. And as I said, it's incredibly lucky that you get people that have helicopter perspectives like Tim has. So on that note, please welcome Mr. Tim Trumper to the stage.
Thank you, Tim and Steve, for that incredible fireside chat. And now, good day, everyone. My name is Jade, and I will be your MC for today. And now we will kick off with our first set of company presentations. Let's begin with BetterX, to be presented by its CEO, Tony Yamin.
All right, good morning, everyone. My name's Tony Yamin. I'm one of the co-founders and CEO of BetterX. We are a B2B digital asset trading software solution and tokenization infrastructure solution for the TradFi space. Here at BetterX, our vision is to connect the TradFi world to the DeFi world by being able to aggregate deep liquidity pools and provide an enhanced trading solution basically for all market participants in the space. As of today, we're working with a range of institutions in the TradFi space. We're working with OTC trading desks, crypto exchanges, wealth managers, brokerage firms, and being able to provide an end-to-end solution, basically from price discovery all the way to settlement and post-execution, being able to enhance their experience and provide something that hasn't really been done before in the space. Right now, in the market, there's a massive problem, first and foremost, when it comes to cryptocurrency infrastructure for institutions. When you look at the institutional market, there's already about probably 70% of businesses in the TradFi space that have some form of crypto exposure. There's already, close to 81 countries around the world exploring central bank digital currencies. You have 5% of high net worth individuals in the US and Europe allocating a portion of their portfolio into digital assets. However, there's no streamlined solution technically that can be able to offer something to them in-house. This is with your wealth management firms and businesses in the TradFi space. 60% of wealth managers around the world have cited that there's a clear problem when it becomes, not just from a regulatory perspective, but from an infrastructure perspective, being able to provide something holistic to their clients. So this is where BetterX comes into play. As you can see, the market's obviously growing quite excessively. Right now, we're still at an early stage. A lot of it, yes, is dependent on regulation. A lot of it is dependent on technology and market demand and consumer demand. However, going back to my previous points, there's still billions of dollars being flown into ETFs. And there's obviously a lot of institutional demand, especially from the upper end of town. However, when you look at the mid-market, there's a lack of infrastructure. So we believe getting in nice and early, being able to provide something in a compliant and regulated manner can not just give us market share, but be able to provide something unique that hasn't been done before. At the moment, the tokenization space, once again, it's scaling quite rapidly. It's still quite early. It's not a major focus for us right now. However, I'll get into it in just a bit and explain exactly what we're doing in the wealth management space and how we're connecting the TradFi world into the DeFi world and why it's important for the future. So I'll get into that in just a bit. Our business is built entirely on APIs. So, the benefit of working with BetterX is if you're an OTC trading desk, if you're a brokerage firm, if you're a wealth management firm, any type of sell-side market participant that's interested in the crypto space and has investors or clients that want to be able to engage in some form of trading activity, they can pick and choose what type of infrastructure best fits for their business. And we're quite nimble and flexible in a sense where we can integrate our solution and align it to their business model. And that's proven to be quite a successful model, especially once again in a space that's quite fragmented and doesn't have, a holistic white label or turnkey solution, that can provide something necessary for these clients. So once again, it's proven to be quite, I'd say, impressive. And I'll get into just the clients in just a bit. So here's a range of some of the infrastructure solutions we have, all the way from trading, CRM management, and even tokenization. In the tokenization market, we've already tokenized well over $50 million worth of private debt and commodity assets, which we do aim to launch on the secondary trading market early next year. However, right now, as a business, we are focused on scaling our digital asset channels across the APAC space. At the moment, our average deposit per user is actually 6 times larger than a traditional exchange. And the reason for that is because we have a solution, once again, that can aggregate deeper liquidity pools, which we want to be able to introduce into the real-world asset tokenization market. Phase 1 of BetterX's journey and strategy is to be able to scale these channels first. So right now, we've been able to scale our channels 35% month on month, and this is with our end user. Our end users are sophisticated investors, wholesale investors, and even institutional investors. A lot of these investors are already plugged in, by the way, to the wealth management firms and the brokerage firms and even the exchanges that are all utilizing our infrastructure for a range of different services. We've got just over 1,200 now, so 1,200 monthly active users on the account. That's been growing 50% month on month since we went live this year. Average deposit per user is about $5,000 which represents about 10 million in AUM, which is what we have on the platform right now, which once again started at 0 earlier this year. What we're aiming to do is be able to streamline this entire process, aggregate deep liquidity pools, and introduce these investors into the tokenization market, which is phase 2 of BetterX's journey and strategy. How we make money. So we're a software solution, as mentioned before, dependent on the type of APIs or infrastructure that the client decides to integrate. That will determine what their monthly amount is. And then, we have a pretty fair trading fees and spread that we also share 50-50 with the client. As of February this year, once we went live into the market, BetterX has been going rapidly across all key metrics of the business. We've been growing 35% month on month when it comes to monthly active AUM. We've been growing 50% month on month when it comes to monthly active users. We've generated close to 2,000 registered wallets for our token generation event, so our ICO that we aim to launch at the end of this year. And we're now working with closer to 10 institutional B2B partners, so 5 of which we're onboarding right now as we speak. And once again, we've also tokenized close to $50 million worth of private debt and commodity goods, which we aim to launch on a secondary trading market early next year. So here are some of our growth rates and traction that we've been able to generate since we went live in the market. I think one of the most impressive things that the team has been able to execute on is the business has only raised about $1 million to date. So with $1 million to date, we've been able to build infrastructure, once again, that's quite flexible, that has capacity to generate and manage significant amounts of trading volume, and also work with large institutional partners who have been able to profit quite heavily off our solution. So since we went live this year, over 1,200 monthly active users now. We're closer to 10 million in AUM, expecting to hit closer to 30 million in AUM by the end of this year. We've been able to generate just over $20 million in executed orders. And once again, our revenue's been climbing about 30% month on month as well across treasury, AUM, trading, and software, which are our key revenue streams. Our team all come from a TradFi background. I myself have a banking management consulting background. I've built and exited a range of software businesses in the past. 2 of our co-founders have built well-renowned businesses in this space. One of them being Aura Group, which is an alternative asset manager, which has close to $2 billion in assets under management. That's Calvin, one of our co-founders. Kinsey is one of the co-founders of Tibra Capital, which is one of the country's largest prop trading firms. Adam was the CTO and global head of data and AI engineering at DBS and HSBC. He's been instrumental in building the infrastructure that all our institutional partners have been utilizing to date. Eric, who's sitting at the front here, is also deeply involved in the M&A and digital assets space. So if you guys want to back a team that know what they're doing, highly recommend to come and talk to us, and we can definitely explain what we're doing. As part of our roadmap, we're already well and truly on our way in exceeding our forecasts. So as I mentioned before, we've got closer to 1,200 monthly active users on the account. That's growing 50% month on month. We're closer to getting to our target by the end of this year, which will be 4,000 monthly active users and closer to $30 million in AUM. By the end of this year, we want to be able to launch our token generation event, so our ICO, which we've already mapped out. And we already have our listing partners involved for that and have gotten everything signed off. By then, we would have probably raised another 5 to 7 million US in our token generation event and have closer to $30 million in assets under management. By then, we aim to launch our tokenization platform. So utilizing all the capital that we raised from our TGE event and obviously our current round that we're conducting now, being able to commercialize our tokenization platform across APAC and continuing to rinse and repeat that strategy until we believe we're prepared for a Series A, which will be towards the end of next year. And then that's when we'll utilize that capital to enter the US market, which I think right now is poised for growth. So another major part of our ecosystem is the BTTX token. So right now, the purpose of our token generation event and the reason why we want to be able to enhance our customer and investor experience is to be able to provide them with something that other platforms aren't necessarily doing right now. Not only does this act as a good retention strategy, but it enhances their trading experience. So part of the BTTX token and part of the ICO itself is it's going to provide enhanced utility to the customers, which can once again improve their trading experience, lower their fees, and because they're sophisticated investors, give them early access as well to the tokenization markets and some of the assets that we list on the platform. So we believe that this is an important aspect to our business, and it's a core function of the ecosystem that we're building. Another important project that we're working on right now, which we're in final discussions with our current banking partners, is the XAUD stablecoin, where we're Australia's very first onshore and fully backed AUD stablecoin, which has already been built out. And once again, we're in final discussions with our banking partners right now to launch this. All of our institutional partners are extremely excited about this. If you know the space really well, you'd understand why this is important. So once again, it's something that we'll be launching at the same time as our token generation event. As a business, we're currently we've got 2 financial structures in place right now. If you're a traditional venture capital or private equity fund, we have a traditional safe note round for you. You still get exposure to the token round itself through the business. So we're conducting a 9 million US valuation cap at a 2 million US round. Comes with a 30% discount. And once again, you get automatic exposure to the token event. So that comes with token warrants. If you're a Web3 or blockchain investor, we also have a private SAFT round in place, so a simple agreement for future tokens. And that within itself will give you full exposure and access to our ICO, which we aim to launch at the end of this year. So if anyone wants to learn more, feel free to come by. Our desk is right here on the side. And yeah, thank you for your time.
Thank you, Tony. Up next is Fraxter Australia. Please join me in acknowledging its co-founder and group managing director, Oliver Sia, and its chief of compliance, Stephen Smith.
Hi, good morning, everyone. Hi, I'm Oliver, the co-founder and group managing director of Fraxter.
Fraxter is a revolutionary real estate tokenization platform disrupting the real estate market. Real estate tokenization is the process of digitizing an asset, like real estate, by minting digital tokens on a blockchain network. Blockchain is a decentralized, distributed ledger technology that enables the recording and verification of transactions in a transparent and immutable manner. It consists of a network of computers, or nodes, that communicate with each other and share a copy of the ledger. Tokenization allows investors to buy and sell fractional ownership interest in real estate assets rather than having to purchase the entire asset outright. This can make it easier for investors to diversify their portfolios and access a wider range of real estate investments. Each digital token is minted and recorded on the blockchain using smart contracts. Every time a transaction occurs, it's embedded in the newest block of data, then validated and approved through consensus. To find out more, visit Fraxter today.
So a little bit of disclaimer. So this presentation that I'll be giving is for education only. Stephen will be covering the offer that we have coming up end of the month. So basically, Fraxter stands for Fractional Exchange Investors. The group has two subsidiaries, both licensed in their jurisdiction. So in Singapore, we're licensed by the MAS, and in ASIC, we are a corporate authorized rep, licensed by Apex Financial Solutions under the ASIC regulations. So real estate is the largest asset class in the world. It is also the most illiquid and inaccessible asset class as well, as you can see. So what is the problem? So who has difficulty in the market? So the real estate asset class is obviously being heavily invested by huge funds, family offices, institutional investors, and that keeps a lot of best affluent investors out of reach in terms of investing or even owning such real estate assets. So why is this difficult? Real estate is very capital intensive. You need really a lot of money to be able to invest in real estate. It is also, many people also limited access. So you may think that how difficult is it for an Australian investor to invest in somewhere like Singapore, Japan, the UK, Thailand, or even the US. So these are some of the things that Fraxter is trying to breach. And investing in real estate is obviously a very illiquid type of investment for you. So Fraxter is basically the platform that helps you bridge these difficulties to be able to access the global real estate market. So the solution is easy. The web platform allows you to gain access to real estate investment opportunities. The investment amounts are all bite-sized, so these are very small amounts. And obviously, we are creating an exchange so that you are able to gain some liquidity in the near future. So the real estate tokenization process is simple. So we are able to tokenize the equity as well as the debt portion of any real estate product, be it a real estate fund, real estate development project. So basically what we have done is we put it on the Polygon blockchain. So that's the layer 2 blockchain on the Ethereum. We create these security tokens, and then through our regulated platforms in Singapore as well in Australia. So we allow investors to invest in these investment opportunities. So since we started 7 years ago, we started building the platform. We started business operations about 5 years ago. We have tokenized assets from all over the world. We have tokenized Japanese assets, a Thai asset. This so happened to be Tesla's first showroom in Bangkok. And in Singapore as well, we have done many development projects. So in total, we have raised more than 85 million, we have tokenized more than $85 million worth of equity, as well as private debt. And the most recent one is a 97 South Perth. So that product is a developer credit debt instrument. So that pays 16% to the investor. And for this particular project is the world's first, or Australia's first tokenized unit trust structure meant for real estate. I'll now hand over to Stephen. He'll talk to you about the next opportunity that we'll be doing.
Good morning, everybody. Thanks, Oliver, for giving us a quick rundown of the actual platform and the technology that underpins that. And what I'm here to do as a representative of Apex Financial Solutions, our Australian financial service license, is talk to you about the underlying real estate that sits behind it. So what we're linking is technology and an efficient platform to a real-world development. And this development is in Manhattan, in a project called Manhattan. It's an investment that's located in Applecross in West Australia, Perth. It's a highly desirable area where we know that there's buyers for these assets. The West Australian property market is in a boom period at the moment. It's not really predicted to change, mainly because we don't have the supply. Like a lot of Australia, we're really seeing a difficulty in people getting into the housing market based on lack of supply. Post-COVID supply issues, builder issues have meant that really there's just not enough property has been built over the last 2 years. So now we're seeing that start to change slowly. Once you can bring property to market, there's people that are buying, there's people that are moving, and that'll start the whole market moving again. So what we're doing is linking a small part of the development cost of that back to an investment that's going to sit on the platform and be there available for investors. The location itself, and it all with real estate, it's all about the location. Location is a premium area in Western Australia, sits right on the riverfront. It'll never be built out. So the people that buy in there, we know there's going to be buyers for this product at the end. That's the most important thing, is to exit the investment. There's going to be buyers for this investment as well. In a great location. So the good thing about this investment, it's not new. The land's owned. We've got development approval. We should be demolishing the existing site this week. We'll commence development in October, complete it by March, and then a couple of months for settlement. So it's a really defined investment period of 24 months. It'll sit there on the platform. So if you're a wholesale investor, come onto the platform. It's a unit trust, but we're issuing FRACs within that. So that's the token side of it. From 25,000 for 24 months, paying 16% per annum, paid at the conclusion of the development. So if you are interested, we've got a stand just on the side of there. Come and have a chat to Oliver, Michael, myself. Become part of the platform, do your facial recognition, upload your wholesale certificate and your KYC, then you can get access to these investments. This investment's just one of many that will be global based as well. So thank you very much, and we look forward to talking to you on the stand. Thank you.
Thank you, Oliver and Stephen. Now we're wrapping up our first set of company showcases. Let's welcome Anthony Wieland, Executive Director at Trend Securities.
Okay. Basically, I've been an advisor in the Australian market now for about 25 years. For the last 15 or so, it's primarily just been servicing the investment requirements of my high net worth clients. Obviously, under the purview of that, for some of them, comes trying to source early stage opportunities. Now, one that we've partnered with recently is Bell Resources. Bell's looking to sort of fill the infrastructure need for the EV market moving forward. Where are we? There we go. So we're looking to do a final seed raise. It's looking to raise 1.2 million at 25 cents a share for Bell. And this is literally the lion's share just to go towards the cost of obviously going to IPO, primarily being ASX listing fees, cost of the prospectus, due diligence, the legals and so on. So once we get this out of the way, really it's just the fast runway towards IPO, looking to do the IPO towards the end of the year. Bell has a company model moving forward. They've identified up to about 100 car wash sites Australia-wide. The network's primarily been identified either based on high residential density areas or major sort of throughways for transport. So they've got the option to purchase 25 of these sites and obviously need to go to IPO to raise the funds in order to just roll out the tech, purchase the sites, rebrand and so on. Okay, so obviously I just wanted to have a look from an advisor's perspective what it was that appealed to me about the investment, because I think that's probably the same boxes that a lot of you would be looking to tick before making an investment. Obviously, I think for me anyway, I've had a lot of clients involved in seed before, and one of the problems is that it doesn't really matter when they're sort of talking about going to IPO. That seems to get pushed out a lot of the time. Until that actually occurs, there's no liquidity event and really no way out. So I guess in this instance, I find when that does tend to happen is when they've got a really short timeline towards that happening, such as an instance like this. Secondly, obviously, is the market. I think we've probably all noticed the growth of EVs on the car when we're driving around at the moment. Even just from 2022 to 2023, we saw the sales of new cars in Australia quadruple as far as the percentage that was sold of EV, going from less than 2% to almost 8%. And that growth rate's expected to continue through to about 2034, 35, whereby they'll have almost half the cars on the road will be EV. Okay. Okay, then we've got the competitive landscape. I think the competitive landscape in this instance, they're talking about data's projecting a shortage of EV infrastructure to the tune of about 27,500 chargers by the year 2033, which equates to the need for the installation of around about 8 new charging facilities every day between now and then. So that equates to around about a shortage of 5,300 by the year 2028. And this data was collected before, obviously, Tesla, who is expected probably to be the market leader in this space, ceased the expansion of their supercharging network in April. So we've got a massive wide gap in the market there. We've got obviously a tight structure of the capital for the company to date. They've only raised 2.3 million in seed prior to this. And we've got the financials. Basically, by acquiring the existing car wash businesses, they expect to be cash flow positive from day one. Okay, so I now just wanted to hand it over to Mark, who's the CEO and founder of Bell, and he'll have a quick chat to you about the company structure itself.
Thanks, Anthony, for that. So, look, what we saw with this EV space was some years back. I saw the opportunity. I thought, look, there's going to be a huge transition in this market, and so what do we need really? We need the infrastructure. And look, how is that? What sort of shape or form will that take? So I sort of saw that there's potential gap in the market. So I sort of said, we've got to look at something that can take use existing infrastructure and really is scalable. So what we basically came up with the answer is the car washing businesses. Look, the car washing businesses are really one of the main things about the car washing business is prime locations in local areas, and they are basically the financial viability of this business. They are very highly profitable, and the real estate costs are covered as far as lease costs or financial costs in the payments, and they're very scalable. There are other things there, but so what we created was Bell Resources, and we're at the as far as electric vehicle charging and a clean energy company. So we were sort of, the focus areas for us was to use the existing car washes and build out the EV infrastructure with destination facilities, cafes and dog washers, and also provide on-site and close proximity renewables, and that's predominantly in solar on the rooftop of the car washers, and solar farms in close proximity. Then we're talking about lithium-ion batteries as far as using those batteries for charging the vehicles and also into the grid. So we're creating a Bell Hub network in metropolitan and regional areas across Australia, and we've got that. So as far as technology, we're using Siemens Surcharge D ultra-fast technology. I'll come to that a little bit later. And we're using also real-time metering on the sites to pull out the data that's been generated. And with this AI-driven dynamic pricing, it comes into play. So initially, we've got 25 sites across Australia. Okay, so where we come with all this is what is the Bell Hub destination facilities about, and where it all comes from is there's a difference in the charging. When we look at charging, you've probably seen the headlines. We're putting in 1,000 charging stations, and what we're really talking about there is these charging stations are in the 20 to 50 kilowatt range. So what that means in layman's terms is these charging stations will take about 3 hours to charge up any EV. So they're not going to really change the market overnight. Whereas the space we're in is in the ultra-fast EV charging. So that means what we're talking about is the 400 kilowatt chargers, and there's new charging technology batteries coming through with the new vehicles that's being developed by BYD and Caltel. And what that means is that these batteries are lithium iron phosphate batteries, and they can charge up in the top-up charge in 5-7 minutes. So this makes this whole proposition into a modern-day service station. Instead of selling petroleum products, you're selling electricity. So how does the Bell Hub site work? So what we're doing is we're looking at the car wash business itself, rebranding it with the Bell logos, putting in signage that's like a service station. So the service station, instead of cents per litre, it's per kilowatt on the price. That's connected to an API. We also have a menu board that we're putting on the site, a digital menu board. Now, all those pricings will feed into an API. We also have the metering on the site The metering is with the digital, with water, electricity, real-time metering, and soaps and chemicals, and a weather station. So that will filled into an API that will then be controlled by artificial intelligence system that will provide dynamic pricing. Let's go on. So really, we've got this integrated approach, and where we're looking at is there are several revenue streams. They're really the EV charging, car washing, and cafes. But what really is about the differences here is the energy production. We'll be using the solar on the rooftops to put into the batteries, and then we are to use that for to sell into the grid and also to use for EV charging. So there's an energy trading opportunity here for us to in the aggregation. I'll just run through quickly the financials here. Really, that I'm showing you that the consistency, the car washing businesses are robust as far as year-on-year earnings, and then we're implementing that with the EV charging as projected out. So we're looking to do an IPO, and that IPO was a combination of debt and equity, and we're looking at $8 million in equity, and through an IPO and a $25 million debt facility. The execution, basically the money raised through that will fund the acquisition of the businesses, the properties, and also provide the EV infrastructure. And that will roll out over a period of 12 months. The ASX listing timing on this is November, December this year. So basically, I suppose what you can take away is there's a high growth and opportunity here in this rapidly changing market. But what we're offering today is the shares to investors at 25 cents, and we plan to list them at $1. So we're looking at minimum tranches of $25,000 and upwards. So anyhow, that concludes me today. So thanks very much. Thank you for your time.
Now let's gear up for our next keynote speaker. Please join me in welcoming John Sharp, the managing partner of Hatcher Plus.
Hi, everyone. Great to see you all, and looking forward to giving you this presentation today. About 6 years ago, I gave a presentation with exactly the same title. You're using AI to predict venture investment outcomes, and that was a theoretical presentation. That was what we were planning to do. And today, for the first time, we're actually going to reveal some of the results of what we've learned from over 400 investments that we've made using AI. So stick around to the end of the presentation. It's only a 10-minute presentation, but look forward to showing you what that is. By the way, my partner, Dan Hooktup, can't be here today. He's based out of Florida, so it's a pretty long flight for him. But Dan is the brain behind this AI, so no difficult questions for me, please. Okay, a bit about us. So we're considered to be a leader now in the space. I think it's mainly because we've been doing it for a very long time. But we're recently put into a list of the top 20 data-driven VCs globally. We're the only non-US company that's on that list, so we're quite proud of that. My main thing is working on process automation. So Dan focuses on AI, I focus on process automation. And by process automation, I mean taking the world of investment that is largely very, very manual and automating it so that we can do 400 investments with 2 people, which is essentially what we've done with the H2 fund. This is the platform that we've built over the last 8 years. It's the only platform of its type in the world. What we've created is basically a centralized data layer that sits at the bottom of a VC or an investment bank or a private credit company or anyone that uses our platform, and enables you to plug in various capabilities. And in the top right-hand side, you'll notice that one of those capabilities involves doing AI on incoming investments. And we have a whole bunch of VCs and accelerators that we work with around the world to do that. We've got something like 606,000 companies in our database now, so we've done a lot of analysis. I'll get to that in a second. But what we're able to do when a new company comes in, if you've got a new idea and you're an entrepreneur, you can apply through our platform, you can apply for funding from any of the VCs and accelerators that we work with, and we can give you a readout on how good we think your business plan is, your pitch deck is, your overall elevator pitch, and we feed that out back to you on the spot. What we're trying to do is help you as founders elevate your story so that you can engage with investors more successfully. That helps us as investors because if you're telling your story more coherently, more completely, that's great for us as investors too. So everybody wins. So I'm not going to spend a lot of time on this other than letting you know that we're kind of a best-of-breed platform, the only one of its type that acts like an iPhone in this space. You can plug in different kinds of modules. I was just meeting yesterday with a bunch of private credit guys in Sydney. We have a fantastic private credit a module that we have on the platform that enables you to manage those kind of funds. But VC is really where we started, so I'm going to focus on that. Right, so what does our research tell us? We've looked at pretty much every venture deal for the last 20 years in venture capital from around the world. And that sounds like a really crazy statement, but it's kind of true. And when we started doing this, we really didn't know what we should look at. So we looked at everything. And what we discovered is a lot of the data was very dirty. It needed to be cleaned up, needed to be needed to be analysed in ways that we could understand some broader trends. And after doing that, we ended up with about 600,000 deals that we could analyse. What that tells us is some super interesting things. And the graph that you see on the left, that is a graph of actual venture capital company cash-on-cash returns over 10 years. A lot of sophisticated investors in this audience. That is what happens when you invest money in venture capital. About 50% of it ends up doing the same or less than NASDAQ, in which case you're trading a fairly liquid investment for a fairly unliquid investment. And then 50% of it ends up doing better than NASDAQ, and 25% of it ends up doing incredible returns. And that's what attracts all of us to this space. And so the core question that Dan and I were trying to answer is, how do we get in that top percentile? What are the key characteristics of investing in venture that it would enable us to get 3x or better returns and be in that top quartile? So that's really what all of our research was in service to. Just a couple other things on this graph here. You see on the right-hand side here, this is a graph of returns, exit returns mapped according to the stage at which you invest. A lot of people hold off investing until the company's cash flow positive and then it's Series B or Series C. We actually think that's not the best strategy, and the research proves it. What you can see here is that the best strategy is to get in really, really early and do a lot of investments, because what these three charts are telling you is don't invest in 3 things, invest in 33 things, or preferably 333 things. Invest as early as you can, and definitely invest before or on Series A. What does our AI do? So when you submit your business plan to us, our AI can do an instant valuation analysis. Why? Because we've got 606,000 companies that we've analysed their value of. And so if you have a vertical farming company in Raleigh-Durham, we know that that company is worth $6.4 million at seed stage because we have hundreds of other vertical farming companies that we can compare it to. This is great for investors because if you're using our platform, you can have an argument with a founder that doesn't involve you versus the founder. It involves the founder versus 660 or 606,000 other companies, which is a very powerful argument. You're basically saying, look, this is the entire world analysed here. The other stuff that we do here is you'll see a graph there on the immediate right. This is how well our AI predicts follow-on funding, and it predicts it brilliantly. And I'm going to show you a bit more about that in a second when I wrap up with the big reveal. This is what I was talking about there with evaluation. This is what our platform looks like in one incarnation of it. It's white label. It all runs on microservices and APIs. Anyone can use it. So as I mentioned, we started doing this about 8 years ago. And we've learned a lot during that 8 years. And what we've found is that the models that we started building about 6 years ago after the first 2 years of initial research are generating significant lift. What is lift? Lift is a data science term. So lift means basically if your model is showing positive lift, it means that your model is working a lot better than a model based on random choices. So what does that mean if you're getting positive lift? What it means is we can directly compare the results of a random set of investments with the results of what we're seeing. And what you can immediately see from here is that our models are doing a pretty darn good job of predicting follow-on investments, IPOs, and acquisitions. And the lift that you're seeing in some cases is 5, 8, or almost 10x, which is incredible. So what you're seeing here is something that's not been shared before. When we started doing this, we were the outsiders. We were the guys that believed that AI could work for venture investing. Everyone thought we were crazy. And now, 8 years on, we actually have some really solid data that shows not only are we not crazy, we actually have some hard data that shows that you can apply artificial intelligence and all the billions of data points that it's able to unravel in a way that can provide really solid guidance to you as investors. By the way, we're not competitive with what Steve does and what Wholesale Investor does. We're really good buddies with them. We don't do capital raising. We run our own fund and we license our technology to other investors, family offices, people that want to run our own fund. It's not expensive. Starts at around $299 to $599 US a month. And you can get a lot of benefit from this. A lot of family offices use this instead of trying to find those very hard to find analysts that they would love to employ. Okay, what does this mean in terms of AI versus humans? So what we've discovered is that after this time, it's proving to be really, really helpful to us. And whenever I present on this around the world, people always go, the question that always comes up is, well, what about the humans? Are you going to put a whole bunch of venture capital guys out of work? No. And we're not going to put a whole bunch of people out of work full stop, because what we see when we look across all the 400 companies we've invested in is that most of the activities at those companies involve human-to-human interactions, and they're going to involve human-to-human interactions for a long, long time to come. Pretty much everything on this list here is a human interaction that has to happen between a founder and an investor, or between a salesperson and a customer, between a product developer and a marketing person. And so we don't see AI intruding a lot on the human-to-human interactions for decades, to be honest, but we do see it, as you saw from the data I just shared, we do see it providing some really fantastic help and assistance to us as investors when we're making decisions. So thank you very much, and I hope that was useful.
Thank you, John, for that insightful keynote. Now let's resume our second set of company presentations. Please join me in welcoming Tia Collings, CEO at Inaxium.
Hi, I'm Tia, co-founder of Inaxium, and I'm very happy to be here today and present a technology that we've developed. It's been 10 years in R&D, focusing on solving energy and water problems within data center infrastructure. Now, with AI boom, this has been a hot topic with news around the world about the energy consumption and water consumption that it requires. So Statistica predicts that we will be spending over $800 billion on AI by 2030, which is a very, very big number. And as we're going to see, there's a lot of exciting things that we can do with AI, but it does have its challenges. This is some news headlines from around the world recently, from top news articles about raising the alarms about how much AI really does require. Now, how much water and energy does it need? Now, I've used UK as an example. This is a place where 70 million people live. In the next 2 years, data centres are predicted to use the same or 3 times the energy consumption of the UK. It's a huge amount of energy. That's why we're talking about using nuclear power in the US to actually get some of this energy to fund the backlog of data centres to build them. In addition, in the next 2 years, data centres will use the same water as half the UK use annually, every single year, to cool the data centres down. Now you can see in the middle, that's a picture of a Google hyperscale data centre and the steam coming off. The water is used to cool the data centre down, and these data centres compete with local drinking water. They use portable water to cool them down. And water and energy are 2 scarce resources that at the moment we're going through a huge climate shift to get to net zero. At a time where AI is going through the roof, we need to have solutions that can reduce energy and reduce the water consumptions. And what we're seeing at the moment is a backlog of data centres where they're not able to get their permits for water, and there's simply not enough energy on the grid to actually build a lot of these data centres in demand. So 50% of a data centre's energy comes from cooling, and traditionally cooling takes in energy from the grid. It uses portable drinking water for liquid cooling, and then it cools a data centre down. this hasn't produced my full slide for some reason, but we think there's a radically new way of thinking about cooling a data centre down. Why use extra energy from the grid when heat is actually power? And so we've patented a system which actually utilises that heat from the data centre and powers a cooling process to cool itself down. And that dramatically lowers the energy consumption required for cooling. At the same time, we've also designed a system that doesn't need to compete with local drinking water supply. They can take in dirty water or industrial wastewater, recycle and clean it through the data centre. Now, if you can remember anything from me standing up here and talking today, the one biggest thing that this thing does, that HydroCool solves for, is it can lower the energy consumption of cooling by 78%. That's a huge amount of savings. For a 1 megawatt data centre, they can save over $600,000 per year on electrical fees, a huge carbon footprint saving as well, and they can clean and recycle over 13 million litres of water. Now, that's just for a 1 megawatt data centre. The smallest AI data centre is 10 megawatts. It's 10 megawatts. The average data centre used to be 50 megawatts. We're now getting them at 500 kilowatts, 300, the huge amounts of data centre sizes. So for those of you in the audience, you can do the maths. We're targeting 3 pilots in the next 18 months. This works at scale. We're scaling the system up and the size of the system. And the most exciting thing on this slide is that we're aiming to have this commercially ready for sale by mid-next year. So there are other companies that look at utilising waste heat, but usually they're a two-sided business model. There's another company very similar that also addresses some of the water problems. They connect to swimming pools. But the problem there is that swimming pools are only sized to a certain size, so you really can't get big enough cooling system. They managed to raise £200 million recently in the UK. So data centre cooling market is worth 12.7 billion. 45% of that is liquid cooling market, and it's growing about 26% year on year, and that's because of the demand from AI and hyperscale. Bajan Rahimi is my co-founder. He is the inventor of this system. As I said, it's been 10 years in R&D. He has experience in the oil and gas industry. Myself, this is my 4th business. I've raised funds before and have deep experience in sustainability. We've also brought on a lot of specialists in the area that have built a lot of data centres around Australia. So the ask here today is that if you're involved in any infrastructure data centre projects, we'd love to talk to you about saving water and energy. We also are raising. We kicked off our round last week. We're raising $4 million for a seed round, and we already have 40% of that committed. So if you're interested, please come and talk to us. We probably should have used Hatcher, but we used another one, Equidium. Maybe they're using you guys already. There you go. So use of funds is predominantly where two of us have got the company to this far. We're building out the team of engineers, sales and marketing, and then we're co-funding pilots. As I said, this system works at scale and should be deployed at scale, so we're funding quite a large-scale pilot of this system. So it's a fully developed technology. We're just getting it ready for manufacturing so it can be easily and quickly manufactured. We've already tested it with a Fortune 500 company. We have our patents filed and we're going for 6 other jurisdictions at the moment. And also we have an economic note. We have a much cheaper way of building this system than traditional cooling systems. So if you're interested to hear more, we are outside, or you can look us up on Wholesale Investor. Thanks.
Thank you, Tia. Up next is Rapid Response Revival. Please join me in welcoming its Corporate Strategy Manager, Andrew Wilkinson.
Thousands of home defibrillators are being rolled out in Australian homes with hopes that one day every household will have one. They weigh less than half a kilogram. They're easy to use if anyone suddenly collapses.
David Whiting is getting back to doing what he loves after suffering from a sudden cardiac arrest.
Something I hadn't experienced before. At some point, I just collapsed.
Every year in Australia, around 25,000 people go into sudden cardiac arrest. 80% of those happen at home, but less than 3% survive.
Sudden cardiac arrest is sudden, instant, surprising. You need something immediate because after 10 minutes, it's virtually impossible to bring you back.
You can now purchase a miniature AED, a key life-saving device, to keep at home.
Having one in the home where the majority of sudden cardiac arrests occur goes a long way to narrowing that survival gap.
Survival for people like David, who was resuscitated by an off-duty lifeguard at an AED.
The number one factor that helped my survival and recovery was early intervention.
Designed with instructions for both adults and children, it costs around $360.
You need to make it affordable to get into the homes. If it's too expensive, it just won't be bought.
It's hoped that by having an AED just like this one in every single home in Australia, within 5 years, tens of thousands of lives could be saved.
It's going to be peace of mind that hopefully you never have to use it, but you have something at hand that is literally can save someone's life.
Nick Hose, 7 News.
So, good morning. My name is Andrew Wilkinson. I'm from Rapid Response Revival, the maker of Cellate, which is the world's first personal automated external defibrillator, or AED. You saw our CEO and founder, Donovan Casey, in the video. He was actually, his partner had a sudden cardiac arrest at home. And after that, he found himself the first customer for a device that didn't exist. At Rapid Response Revival, we're motivated to help save lives. And by 2040, our goal is to help save 100,000 lives. And this device will help us do that. So every year around the world, around 8 million people die from sudden cardiac arrest. To put that in context, it's more than the top 5 cancers combined. They're 16 times more fatal than traffic accidents and 300 times more fatal than house fires. And yet we all have smoke alarms in our houses, but no one has a defibrillator. To put this in context, I'm told that today around 700 people registered to attend today's event. That means there are 35 people at the event today who know someone that in the next 12 months is going to have a cardiac arrest. It could be a friend, it could be a family member, it could be them. But that's 35 people out of 700. And this device could help save those lives. One of the key determinants of your survival rates of a cardiac arrest is how quickly you receive defibrillation. If you receive defibrillation within the first minute, survival rates are above 90%. If you receive defibrillation after 5 minutes, survival rates drop to about 50%. And if you receive defibrillation after 10 minutes, you're unlikely to survive. 70 to 80% of all cardiac arrests occur in the home, and yet no one has a device in their home. That's why survival rates for at-home cardiac arrests are around 8%. The reason why is because the average ambulance response time is between 8 to 16 minutes. And in Sydney, it's 16 minutes. So that's why we built the world's first at-home defibrillator. And it's designed from the ground up to be in people's homes. It's 75% lighter, 75% smaller, and 70% more affordable than every other AED on the market. It's also a single-use device, which means there's no complicated maintenance schedules. And if you don't think that's a problem, consider the fact that 30% of all AEDs, public access AEDs, won't work as required, and it's primarily because of a lack of maintenance or poor storage. So we launched sales in 2022, and since then, we've sold 22,000 units. We're the #1 AED in Australia, where in our first year, we sold 8 times more AEDs than one of the world's leading brands, and we're currently selling in 7 different countries. And pleasingly, 70% of the people who buy a device also take up our Cellate for Life subscription program, which gives them effectively a lifetime of savings with an AED in their home. Now, this is a tech conference, so what the hell has an AED got to do with technology? Well, first of all, we used machine learning to help design and configure some of the technology in here to help with classification of heart rhythms. But we're also a 2 and 4G IoT device, which means we've got remote monitoring on all our devices to ensure they're operational globally, which compares to the 30% of public devices which don't work. It also means that we do automatic status checks to ensure the operability, but it also means that we record and get sent back all the cardiac event data and the defibrillation data back to us. So we're rapidly building the world's largest database of cardiac arrest event data, which if we can apply AI to that, we can help improve the defibrillation therapy, the emergency response times, and also downstream treatment of cardiac arrests. If we look into the future, combining AI with using our database and again using some AI, we should be able to help improve automatic emergency response times. We've got GPS location sharing, and also with the real-time diagnostics and therapy data sharing, we can share that data with emergency services on the way to a cardiac arrest, and also share it with hospital staff before the patient arrives in the hospital, which again, the treatment is all about time to treat, and by shortening those windows on everything, we give people far more time to improve. Sorry, I just went through these and I'm running out of time. So this brings us to our Safe City initiative, which is a connected network of AEDs and emergency responses to improve cardiac arrest survival rates across the city. And from our calculations, we can improve it by 6 times. The way we can do this is improving the number of defibrillators in people's homes, putting them in the hands of more first responders, because currently only 5% of first responders actually have a device, giving bystanders the confidence to actually use the device by having a simple-to-use device. And we can improve survival rates from less than 10% to more than 60%. And that equates to 4.5 million lives saved each year globally. Now, we're currently running a capital raising. If you'd like to know more information, please come and see us next door. And I just want to quickly finish with this number. This is what motivates us. It's not a slogan, this is actually our goal. And we see it as just the beginning. And if you'd like to, we'd love to have you along on the journey with us. Thank you.
Thank you, Andrew. And now let's move on to our next company. Please join me in welcoming Dr. Stefan Verheeg and Dan Stevens, co-founders at BrainVector.
So maybe you just saw me walking onto stage and you thought, is this guy drunk? I got it a few times. Not being drunk on stage, of course, but being perceived as, because of the funny way I walk. I was actually born with SMA type 3, which is a genetic difference. And it gave me a physical disadvantage in life. And I must tell you, you need to be very strong in your head to overcome normal day-to-day life situations. I turned this into my superpower to think outside of the box, to look at life obstacles in a different way, to jump over them. Well, actually, not jumping over them, but looking at them from a unique perspective. Hi, everyone. My name is Dan.
Hi everyone. I'm Steph. I'm a medical doctor and specialize in neurology. I'm not his neurologist. I'm his friend. And before being a doctor, I was a pilot at the Air Force. I can tell you that flying a high-performance jet is one of the most demanding in terms of well-being and mental performance. But also, when I was a clinician, I was in front of patients with devastating mental health issues. So personally, I'm practicing a bit of a Tai Chi to stay relaxed and calm. But you can imagine that what would be amazing if we can offer everyone a boost of well-being and offering that for everyone anytime. But maybe you ask how that works, so it's maybe better to have a look at the video.
When What if we could use positive memories as a weapon to suppress certain symptoms associated with mood disorders like depression?
Harnessing the power of Brain Factor, we are tackling a universal crisis, mental health. A concern affecting half the global population at a cost of more than $400 billion in 2023.
After being inspired by a scientific paper published in Nature, I decided we could create a system based on personal memories to induce a boost of positive emotion in human subjects to help to treat disorders, making the brain create the natural good feeling chemicals to overcome depression symptoms.
C'était bien? Oui, super. Super.
The first trial back in 2019 showed very promising results, but it wasn't scalable.
But with recent advances in artificial intelligence and machine learning, the process now called VRPME is scalable, completely scalable, while also being personalized to each patient, culture, and language.
It's these gestures of love that define who you are, and it's something I deeply respect.
That was incredible. Actually brought tears to my eyes. It was almost like euphoric. Always like a kind of injection of a drug, really.
Really?
Oof, this is intense.
We currently have over 42 psychologists ready to incorporate our VRPME process into their practices, with the price they are willing to pay falling perfectly in our budget strategies.
With our research and industry partners, we have shown the technology is now mature enough to bring to the next stage.
In our profession, this is what we need.
So I take this example of this patient. He's feeling lonely and away from his mother country and having some symptoms of depression. With the psychologist, we identify with him what we call the positive emotional triggers. What in his life, in his memories, are creating this boost of positive emotion when you have goosebumps. Because actually these emotions are extremely powerful because they release the neurotransmitters like serotonin, dopamine, or oxytocin that are actually lacking in depression.
So from there, we took a headshot of the brother. We took a 30-second voice message, and with our own emotion AI, we created an artificial version of his brother. We call this process Virtual Reality Positive Memory Enhancement, VRPME for short. We basically create a fully personalized, individual environment to stimulate those neurotransmitters that Steph was talking about in order to improve his mood.
Yes, and it worked. We really improved his mood. Now you can imagine that we can generate and create a non-pharmacological treatment for depression. And with this technology, it's an algorithm-based therapy. We can actually give this treatment affordable and accessible for everyone. So our vision is to make mental health care efficient and stigma-free.
So our greatest asset is our team. I bring the AI, tech, and entrepreneurship to the team. Because of my superpower, I started my first tech company when I was 15, been a serial entrepreneur since, and for the last 10 years, I've been in the mental health space. Steph here next to me is a renowned neurologist. Why is it such a difficult word? Anyway,
I don't know.
Neurologist, and his experience as a fighter pilot has brought the scientific foundation and the vision behind Brain Factor and VRPME.
So what we have achieved in the last 6 months, it's quite amazing because first we raised $500,000, and I thank John Bacon from Butthurst Capital and Simon Cardosi from Corona Capital for that. And during these 6 months, we create our first product. We also put a patent, and we made a market validation. So now we need to reach a very, very critical inflection point by Q3 2025, and that's why we are here. We are here to raise 1.5 million, and with these funds, we will be able to reach the next level of technical readiness And also, very important, generate very strong data, because this data will help us to launch Brain Vector and VRPME nationally and then next internationally.
So as we established, there's a big market demand. But at the moment, we use a semi-automated version of VRPME, and we can deliver around 5 sessions per week. We need to go to a fully automated version, and that's why we need your investment. So we can deliver around 100 sessions per week, and then we can scale. Our estimates are that we can reach an annual occurring revenue of $250 million in 5 years.
So join us in this amazing journey, because with you, we can change the life of lots of people suffering with mental health issues. And also, we are exploring mental health performance. So be very welcome to join us, and we will be more than happy to discuss with you later.
Please have a look at our stand later on and experience VRPME for yourself. It's truly amazing. Thank you.
Thank you.
Thank you so much, Dan and Dr. Veheg, for such a wonderful showcase. Now, the next company is DSG. Let's welcome its co-founder and CEO, Ryan Johnson-Hunt.
Good morning, everyone. My name's Ryan. I'm co-founder, CEO. I'm from New Zealand. I've flown in for the day. That's why my accent's a bit funny, and I'll try and speak as slowly as I can. So very excited to talk to you all today and share what we're doing with DSG. DSG, really at the core of it, we're all about bringing investments, on-chain investments, into the mainstream. So we see this happening overseas. We see this trend of financial services moving on-chain, but not so much happening in APAC, and we really are passionate about leading that. And I'll also share why right now is the perfect timing to get involved. All right, so the problem. The problem is inefficiency in capital markets, to boil it down. And all of us should know in the room that the legacy infrastructure when it comes to capital markets is inefficient and a little bit kind of aged. And particularly for SMEs and alternative assets, it's really, really hard to raise capital. And Steve and the team are doing the Lord's work at events like this, but there's a lot of projects out there that are, even not only just startups, but even in that medium kind of size that aren't quite ready to IPO. It doesn't make sense for them to IPO, and they need a bit of bridge to help getting there. That's where we come in. There's a lot of lack of transparency. These traditional infrastructures, they use lots of intermediaries, and intermediaries cost fees. And if there's any kind of gap in settlement time, whether it's T10, 3, T1, you need those intermediaries. So when we cut that down to T0, it helps a lot. And there's a growing disconnect between the world of traditional finance and the type of digital asset solutions that are out there, and we want to bridge that gap. And the market opportunity is absolutely huge. There's lots of different reports out there, but there's all these illiquid assets and all this value that's waiting to be captured if someone can actually pull this off, and we are. So why is right now the best time to get involved? And I should address a elephant in the room. Hasn't this been tried already? In the news already, there's the ill-fated attempt from the ASX to try and integrate some settlement things. It's really, really hard for an incumbent to integrate part of their system into blockchain. So why it's perfect timing for us is because we can start from scratch and build it from the ground up on the distributed ledger technology. So the confluence of 3 factors why right now is the perfect time to get involved. One is technology. Technology has matured, the token technology is better, the ecosystem is huge and global. It's interoperable, the system that we use, which means we can tap into global network partners to share liquidity. No more silos. Regulatory, right? We're seeing the leaders, the Singapores, the Hong Kongs come out leading. The New Zealand and Australia's kind of following and trying to catch up. But, time is changing. In New Zealand, we've done a lot of work with regulators. They see securities as securities. They are tech agnostic, and we've held their hand through that process. And of course, behavioral shift, the way people do things, consumers, it's digital cash is coming, CBDCs come down the track, everything is moving digital. It will become more and more normalized to have investments there as well. So our solution, we are fully regulated as securities. The blockchain is just the infrastructure. The compliance is hard-coded into the smart contract. The assets cannot transfer to a wallet that hasn't been whitelisted, and tokens can be recovered. If something happens, the issuer can recover those tokens or burn them or mint more, full control. And of course, distributed ledger, super efficient distribution. In fact, we completely disintermediate clearinghouses, custody, and share registry functions. That's where we save fees for our clients. And, we've got a competitive advantage. It's all about partnerships, right? If we are trying to emulate what the AIM exchange is to the London Stock Exchange, then we need partnerships. We've got one right in the room somewhere, Jonathan Duncan, Wholesale Growth Capital New Zealand, right here. One of our first nominated advisor to help companies list and get compliance ready for our platform. And we're also in discussions with the National Stock Exchange, how to partner with them to help onboard IPOs into their ecosystem in exchange for their resources. It's about alignment. We're not competing with the big exchanges, we're supporting them. It's all about the ecosystem. I mentioned we've got a global network of providers that we can tap into and share liquidity. And we've spent the last year issuing our own magazine quarterly in print and digital on shelves around APAC, thought leadership, dominating in the space and becoming top of mind, which also becomes a very handy catalog for listing our products and offerings. And also, we are live, which is very exciting. Looking for beta testers, please come and see me. We start small, start local, but our eyes are on the prize. It's APAC. Singapore is the hub for the hub and spoke model. It's all about network effects when it comes to building a successful marketplace. All right, so what do investors get? They get this very simple Web 2 look and feel. They're not worrying about gas fees. They're not worrying about digital wallets. That's all done in the background for them. Secondary market, they can post and sell and buy on the secondary market. And as I said before, you can't lose your tokens. Here's just a little sample of what we have and what we've coming up down the pipeline. Variety of different offerings. You'll notice in the bottom row, there's some kind of a little bit unique bespoke items, giving investors chance to get exposure to things like staked Ethereum and carbon credits in a very TradFi, very traditional packaging, shares. Issuers get to issue shares. We can help them, tokenization as a service, mint, distribute dividends, and use the secondary market. And of course, the registry function is something that's built in that we provide. So our team, our co-founders, we all have experience in different parts of technology and finance, traditional finance, and we've got a gold star kind of crowd around us as advisors as well, and the best legal support and tax and compliance money can buy. Business model, two-sided marketplace, right? Two-sided marketplace, it's all about network effects. So because we can disintermediate, it means we can lower fees, which means we're more accessible, and it all comes to volume and being able to charge transaction fees of 30 basis points. Our access to listing is very, very reasonable compared to our other ecosystem partners. And what are we doing with the money? Well, we are growing and expanding, right, into different markets, different products, moving towards retail licensing where the volume is. And this is the most exciting. Once you get things in digital form, you can do really cool things with them, right? Once we get the shares and the bonds into digital, it means we can use permission DeFi products, collateralized loans. We can use an order book, instead of an order book style marketplace, we can use liquidity pools and automated market makers, and even fixed income products that are backed by on-chain treasury bills. So our ask, we're raising $1 million for 10% of the company. That's a 10 million pre-money valuation. Please come and chat to me. I'll be on a panel later, or you can see me in the deal room. Thank you very much.
Thank you, Ryan. And now let's get ready for the first panel session of the day, who will take us through the AI investment trends. Please join me in welcoming our moderator, Maria Halas, CEO of Stride Equity, and our panelists, Matt Simons, CEO of Solution Energy, Brent Barnes, CEO and Managing Director at LBT Innovations, Robbie Karp, Non-Executive Director at Rapid Response Revival, and our very own Steve Torso, CEO and co-founder of Wholesale Investor and Capital HQ.
Good morning, everyone. Can I ask you to turn left and introduce yourself to your neighbor? Okay, that's enough. Thank you. I know you're going to be good friends, but this is just a demonstration of some of the things that AI cannot do yet. But what we do know is that investment in AI has exploded in recent years. When you look at Microsoft market cap, I think, has grown around $1 trillion this year on the back of OpenAI. So we're not talking about billions, we're talking about trillions. Venture capital firms have poured billions into burgeoning sectors, recognizing the transformative power of the technology. My name is Maria Halas, and I'm the CEO of Stride Equity, and we are a venture-backed digital investment platform. We see AI startups day in, day out, and what they mostly do is they present tools, and these assist with business efficiencies and agents that can do everything, pretty much from organizing your digital marketing to talking to your customers. Unlike tools and agents, the focus for venture capital has been to invest primarily in the foundational technologies, and we've seen that with the big companies and where they're putting their money. We've seen significant investments in areas such as natural language processing, chip manufacturing, and of course, computer vision. But not just VC embraces investment in AI, but also corporates. What they invest in are more around strategies to improve efficiencies, improve revenue, improve profitability. We also invest in AI at Stride Equity. And whilst I had a personal assistant for 20 years today, I've got Lucy. Lucy answers my phone, takes a message, and even books my appointments on my Google Calendar. And I'm pretty sure I'm not the only one who's using AI-assisted personal assistants to manage their business. I also would like to take credit for this bit of a preamble, but actually it was written by Google Gemini with a little bit of help with humans, because obviously none of these tools are perfect yet. So with this few words of introduction, I would now like to introduce our panel. We've got a fantastic panel, and I'm going to start with Matt Simons, who is the CEO of Solution Energy. And the reason I start with Matt is because Matt is bringing history of AI. He was part of one of the first exits of successful AI investment. So Matt, would you mind telling us a few words about what happened there and what was the company, and perhaps even put it in a context of what happened since?
Sure, yeah, this was I guess what we'd now call a vertical AI business. The idea originally was that I had a business that had a financial services and a credit license, and I observed that...
Matt, would you mind putting your phone?
Oh, sure, yeah. I observed that I was telling my team, guys, we can't carpet bomb the customers with the same message. Everyone should have their own message. There's this digital marketing nirvana idea about like personalization. Of course, my poor N=1 compliance person is like, Matt, we have obligations under these licenses. This is never going to work. And it occurred to me that this would be a great application for a automated system In those days, there was no large language models. There was just something called NLP, natural language processing. And so we built the platform that was called Red Marker that we ultimately sold, as you mentioned. We built that platform on the premise that you wouldn't replace the human compliance experts. You would rather help them save time. You would be a productivity win. And I think that's become an interesting theme as we look to the successful examples of collaboration between humans and AI systems in functional workflow tasks. It seems obvious that what's become clear is there are some rare examples of the sort of mythical game-changing AI that replaces the human. I think the far more investable and obvious cases are ones where the AI complements the human. And in this case, one thing that most compliance teams were struggling with is how do you surveil this very large growing area of like digital channels? It was just too much to look at. And so you could use tools to identify risk probabilistically, not perfectly, not as good as an expert, but you could complement the human and then bring back examples for them to review and then treat the review function as a training data loop that then helped improve the system. So that was what we built at Red Marker.
And for context, that was 2017, so 7 years ago. And the world has changed since, of course. One of the things that we do talk about when we talk about AI investments is, the language models, natural language models, then tools and agents. But nobody seemed to be talking about how are we going to support these data centers that are required with energy. And of course, Solution Energy was formed around that. Tell us a little bit about Solution Energy.
Well, I think very, very talented investors and talented entrepreneurs would go and focus on the first order problem, and that is build a better language model. That's a bit above my pay grade. So I have to think about, well, what would a more average lower level IQ person do? They would probably think about, well, second and third order effects, like we're going to need more power because AI is a voracious consumer of electricity. When people think about data centers, we often think about, well, let's just extrapolate, from the data centers we have today to the ones we need to do AI model training. And that's a little bit of a misnomer because not only are the AI model training data centers multiples, larger than a traditional data center, they also operate at very high capacity factor. They're running almost 95% of the time. And so these data centers are chocked with very expensive GPUs that the CFO of a large corporation paid a lot of money for. They want the data center to run all the time. And the problem, of course, with big data centers that run all the time is they burn a lot of electricity. Now, these same organizations want to have renewable energy. Everyone wants to be doing the right thing from a sort of ESG net zero perspective. And so you find these large organizations that want to win in model training, and yet they want to use renewable energy. And the truth is, intermittent renewable energy, even with firming, sort of battery backup, etc., doesn't match the load profile. So we need to find a new option, and that's what we're doing at Solution Energy.
Thanks, Matt. I want to switch up a little bit and talk with Steve about his view of where Matt started in 2017 and where we are with AI and investments in AI has changed, and what should we invest in? What is the landscape going to look like? And what are the companies that are going to succeed and what are the companies that might not?
So as a founder building a business, I think one of the hard part is always setting your own direction, how you utilize these kinds of tools. Sometimes it's out of necessity, sometimes it's out of, just sort of motivation to adopt what's coming forward. From an AI perspective, you could almost call it sort of binary. It's either adapt or die. And the reason is because it's, I think Tim said it really well in his sort of opening talk, where the previous businesses were focused on the building of sort of human resources and sort of capital intensive resources, whereas the future is driven by sort of data and AI. That makes logical sense to me. So then you start to think, well, then how does that change the way you invest into your own company? And if you notice for the last 18 months, all the big tech companies have actually put out announcements saying that, hey, basically they've made people redundant, and at the same time, they've been reinvesting into AI solutions themselves. Now, I know it's not popular when people, sort of AI experts will talk about, hey, invest into AI, but everyone's job is safe. The reality is that goes against everything that we're seeing now. So I think from an investor's perspective, the question has to be is not just how companies are, what company is doing from an AI front, but I think it's also worthwhile to ask the questions that Tim mentioned as far as what does that signal to noise ratio look like from a customer to the company. But then the second part is, what is the technology stack that the actual company is working with? and then how are their team actually using it? Because the more we utilize AI across our businesses, the more productivity we can create, product opportunities, efficiencies, etc.
So do you think it's going to be necessarily the case, though, that we create more opportunities and more efficiency with AI? I mean, you see a lot of companies within your business, in wholesale investors, both listed and unlisted. A lot of the companies have gone through really difficult times on the market. And since AI became the it thing to invest in, a lot of the companies are putting badges on their companies, logos saying, now we are an AI company. What is real and what is really window dressing? And how should investors look at these companies and really say, okay, well, is this company is really window dressing by putting AI behind everything, or is this real? What are you seeing on the market?
Yeah, definitely we're seeing a lot of the window dressing part, but I don't think it's in so much of a negative way in that, you know, companies are actually trying to overlay AI into their businesses because they understand there's a business opportunity and a case that comes along with that. And likewise, you know, it's been these last 2 years, to put into context, have been two of the hardest years from a fundraising perspective that I think the market has seen in the 15 years that I've been running WI. And as founders, you'll utilize whatever levers you have to assist in a capital raising process. So AI comes across as one of those. But as far as true AI sort of in Australia, they're really, like, I haven't seen too many companies where it's they are sort of AI research driven companies that are actually building products. It's it's basically an overlay of AI over existing businesses.
Thanks, Steve. And of course, we've got Brent here, who runs LBT Innovations. And you guys started a long time ago on machine learning, and your entire technology, diagnostic technology, is built on doing things better by using machine learning as opposed to just humans. So tell us a little bit about your LBT Innovations first, so we can put it in a context for the audience who doesn't know what your company is about. But also, then, if you could address the machine learning and then perhaps how it develops into AI and what the difference is.
Yeah, so I think, you know, kind of in the context of being a clinical diagnostic device versus kind of a general AI product, I'd be the first to say that kind of segment's a bit of a laggard segment. And I'll get to the point in a moment. It takes a slightly different view as Steve perhaps is I actually think you've still got these macro trends of not having enough GPs, not having, you know, we're in the space of microbiology. At any one time, 10% of microbiology jobs are vacant in the US. You've got rising wages. So I think in the highly skilled area, when you think about healthcare, when you think about life sciences, I think AI has a slightly different role to play. And so back to the question around efficiency and how do we kind of translate that into value for our customers, I think you've got a regulatory hurdle to get over. You've got this barrier of entry, which can be really good once you're in that space, but that pathway to get there is kind of pretty long. So from an investment thesis, which is kind of the theme of this conference, is it's not for everybody. This is not typically an overnight 1 to 2, 3 year scaling this business with huge numbers. It's just not going to be the case. It's going to be tens of millions of dollars. It's going to be many years of development. But once you go through that process, you know, the kind of opportunity at the end, you have got high barriers to entry, and you're really delivering value for an ecosystem within that healthcare kind of context. So, you know, I think some different challenges when you think about kind of that healthcare sector. So what we do at LBT Innovations is that we automate culture plate reading. You know, kind of go back to your science days and looking at petri dishes. Well, that's used in microbiology for a whole bunch of different disciplines. And so rather than having scientists taking a lid off a plate, looking at it, counting colonies, we've got an AI-based platform that does that automatically. So it does it more efficiently, more accurately, and obviously reduces cost.
So, Brent, you mentioned regulation in healthcare and digital health. I think it's a real hurdle that most people don't appreciate. So when you develop any technology, how can the regulator, in your view, believe AI-driven technologies or AI-generated data as opposed to human data? So what's your view on that?
Yeah, great question. So just to give you some context, right? So how do we prove that our kind of magical colony counting thing that is automatic and, you know, all those things that I said, it does it more effectively, but how do we prove it? What we did is we did a 10,000 multi-center patient clinical trial, and we had 10,000 of those little plates. reviewed by 3 microbiologists who were blinded to each other, and they put their results into a computer system, and then we ran those same 10,000 plates through our system. And we correlated those results. And it was really interesting because it showed some divergence in colony counting between the manual microbiologists, but we were able to kind of statistically look at how that compared to an automated platform. And so, you know, you kind of think, well, what is that barrier? How do you prove it? It's bloody hard. And it takes millions of dollars. That's how much we spend on this clinical trial. But in the context of you've got to get it right, it makes a big difference to go through that extra validation burden, which is super, super important.
So that you're making a really good point there around comparing human and AI-generated data. And this is not a topic of this panel today, but I think that even the regulator moved along significantly in that area. You may have noticed already that some of the companies, in silico drug development companies that have been designing drugs purely in computers, AI-generated drugs, have already been in phase 2 clinical studies. And it's relevant to the cost of drug development because we're used to spending $1 billion per drug in approved drug in the market. Today, and probably about 15 years plus to develop from preclinical to approval. Today, when you look at a company and you're looking at investing in an AI-driven drug development company, they can take a drug from concept to the clinic, proof of concept, within 18 to 24 months. So the cost of the development and the speed of the development is astonishing. The cost come down and the speed has also gone up. So when you're looking at investments in that space, and I don't know how many of you have interest in life sciences, but I would really recommend to look through all these in silico drug development companies that are going to absolutely revolutionize this entire space. Moving on now, I still want to talk to you, Brent. One more question around what are your thoughts about how this all will change the sector, the life sciences sector, AI generally, and what companies investors should be looking at when, particularly in your area, diagnostics, but even generally, just digital health or life sciences. What are the companies that you think are going to succeed?
Good question. I won't give it specific company examples, but to your point, I think there's...
LBT Innovations, of course.
Of course, our company, but look, I think back to your point around the drug discovery, that it is massive. This whole generative AI and being able to find patients with chronic diseases quickly and at scale to match them to drug development companies at an early stage is a game changer. And that, to your point, so I'd be looking at companies in this generative AI space specifically for clinical trials. You can kind of Google those terms, have a look at what companies out there kind of doing that. I think that is a super exciting field, and that has the ability to scale really quickly.
Thanks, Brent. Robbie Karp, you're the non-executive director of Rapid Response Revival. Firstly, can you tell us a little bit about RRR? Because that's a really interesting topic within where we are going now with the data, etc. And then more specifically, can you address data within that whole life sciences landscape?
No, sure. Thanks, Maria. Rapid Response Revival is a medical device company. We've developed the world's first portable, personal, low-cost defibrillator. That's it there. This is now the highest selling defibrillator by volume in Australia. So a defibrillator, we still don't know what the real causes of sudden cardiac arrest are. So there needs to be a defibrillator in every building. In this building, the defibrillator is downstairs. And if someone has a sudden cardiac arrest, someone's going to have to run downstairs, go to the concierge, and get the defibrillator, and then apply it. If you're in an office building on the 27th floor, chances are defibrillator's downstairs. So this is a game changer. It's a low-cost, portable defibrillator. It goes anywhere. Now, the interesting thing is that for AI companies, the things that really will make a difference are, I think, there's a few factors. In the first instance, if you have access to really unique, special, otherwise unavailable data, then that becomes really valuable because you can do things with that data that nobody else can do, obviously. And so you can either get that by, special commercial arrangements with research organisations or other organisations. But if you have a device, then that gives you access to the data on the device. Now, with rapid response, because this is the highest selling AED on the market in Australia by volume today, we will soon have the largest data set for sudden cardiac arrest incidents. This is an IoT connected device. It gathers data from sudden cardiac arrest events, and that gives us an opportunity to look at the data and do some very interesting analysis on it. We can look at environmental factors, we can look at locations, we can look at all sorts of things that will lead us over time to drill down into the causes of sudden cardiac arrest.
So, Robbie, you collect really valuable population data with your device. I think with all this, the question is, how can we monetize it? And we know we can because a lot of the companies have been doing it, but what are your plans to monetize your data? Obviously, it will assist in diagnosis and understanding disease. With healthcare being largely government or institutionally funded, how are you going to be able to monetize your data?
All right, there's two parts to the business, I guess you'll say. So one is sales of device. If you want to buy this, it's available on subscription today for $16.50 a month. First year's free. But in terms of the data itself, so this is a global product, so we're already making sales in other parts of the world. It will soon be the largest, we will soon be the largest repository of sudden cardiac arrest event data in the world. And this is just our first product. So we have a roadmap for innovation for more sensors and more data acquisition for all sudden cardiac events around the world. What that will let us do over time is influence things like sudden cardiac arrest protocols. It'll let us do things like influence standards for around sudden cardiac arrest and defibrillators. And over time, we'll be monetizing the data by commercializing the intellectual property around those concepts and the learnings that we gain out of the AI itself.
And I guess this is the data that could easily dovetail into a drug development, AI drug development program.
Without question. So besides our roadmap for innovation for the AI and the device, there'll be a whole lot of complementary products that can work with this. Some of those we will develop ourselves. Some of them will be in partnership with other companies who are developing related products. And through that, the ecosystem around sudden cardiac arrest, which we're now starting to build out, will grow tremendously.
Thanks. So Matt, I would like to return to you a little bit around energy supply. What are going to be the biggest challenges to be able to provide, for your company, but generally to provide and supply sustainable, energy to the sector?
Well, I think that you should never waste a good crisis, and data center demand for AI model training is going to create a crisis for baseload renewable power. And so instead of being depressed and feeling troubled about that, I think the better option is to realise this is a great opportunity for regional Australia, where you can locate advanced AI training centres and co-locate them with this next generation of generation capability. If you look around the US and other markets in the world, you see a trend where these AI training factories don't behave like traditional data centres that you would all be familiar with. They have a model where they are very introspective. Unlike an edge network that's serving Netflix to people late at night, and then when people go to bed, there's not as much demand, and so the demand profile tapers off. These chock-a-block with GPU AI training centers are running all the time, as I mentioned earlier, which means it's less important that they're close to population, which used to be the dependent variable for data center co-location in the past. What now tends to matter is that they're close to a renewable energy source that allows them to actually keep the thing running. And so this opens up a great opportunity when we think about regions around Australia that have excellent power infrastructure. Maybe they're inside a renewable energy zone, maybe they're in transition from traditional fossil fuel based to renewable energy mix. These locations could be the recipients of very large, by traditional regional Australian standards, very large capital investments. I mean, these data centers cost like plus $1 billion just to build one, right? And we could have multiple of these across lots of regions in Australia. So it's a huge challenge because we're turning off the baseload power we have and we're replacing it with renewables. But on the other hand, if we can find new renewable energy generation capability, then I think it's a huge opportunity. And we're at Solution Energy very big fans of what's happening overseas, where data centers are basically funding first of their kind geothermal plants to create bankability to then support this new generation coming onto the market. And I think there's a great opportunity to do that in Australia, and that's what we're shooting for at Solution Energy.
Yeah, so enormous opportunities in investment in renewable energy, the message is. And of course, energy is a traditional sector, so is real estate, so is infrastructure. How are these how are these industries going to change with AI, Steve?
I probably can't speak to those specific industries, but I think the nature of business actually changes. Like I sort of started off this day asking the question around, what does the actual future startup look like? What does the actual future enterprise look like? How do the functions look like inside companies? And the latest talk by Eric Schmidt, where he's talking about AI agents, which have been talked about for the last sort of 18 months, to me provides a real insight, especially given that there's now software solutions coming out with that. So I think combination of factors is going to happen. I think, across the big tech companies, redundancies are going to still keep taking place. I think a lot more startups are going to be created. A lot of the current software solutions will be commoditized because, just the different low and no-code solutions that are coming out make it so much easier to do that. And then at the same time as well, I think that there's a great opportunity for companies, and talking about AI being deflationary, there's a great opportunity for companies to basically upskill their teams and also upskill their outsourcing solutions that they're using to create incredibly productive and efficient companies. So I think the fundamental thesis that I have is that this next wave of companies coming forward is probably one of the best opportunities to get to profitability as fast as possible. And we're likely to see some of the most profitable companies created, profitable companies in history created over the next sort of 5 years.
Brent, in your company, LBT Innovations, where are you going to invest in AI? What are your conscious, well-considered investments are going to be in AI?
Yeah, so at the moment, it's important for our customers that our AI product is autonomous decision-making on the instrument itself. So we've got a hardware platform with a built-in AI element to it. Where we'll move the technology is the AI piece will move up into a cloud and start utilising the data that comes out of all of our assessments that are done through microbiology labs in both the infectious diseases space, but also in the pharmaceutical manufacturing environment. So we'll reposition what's a necessity at the moment to have it on board on the instrument to start repurposing the data associated with that in a more convenient way where we can to be able to access it in the cloud.
Robbie, in your view, you've got a background in commercializing software generally, so you've got a broader picture than perhaps just a medical technology. Where do you see the winners in the AI space in the next 5 years?
So they're going to be the ones that are leveraging some very unique software technology solutions. So things like secure aggregation and federated learning are quite important at the moment. Ways to do AI on the edge, so that's actually very interesting about doing the AI on the device. I think that's really an important game changer. And I think the intersection of different industries, so AI unto itself, I think we've all sort of said the same thing, is part of something else. So in some cases, yes, an overlay. And I think that's all right because, the companies can, migrate into AI areas. But if you find good intersections of different industries, and so in my case, it's more to do with healthcare and AI, those are the places that will really be taking off and finding very new ways of doing things. What you said about the reduction of time from years to months is look, I didn't know that. That's fascinating. And that's exactly the sort of thing.
Thank you. Well, I can see that we're running out of time, so I'm going to close the discussion by saying that the one thing that we seem to agree on, that AI is creating an environment of rapid change and evolution, and then the survivors will be those that can adapt, plus those that can actually deliver value to corporates and enterprises. And I think to that end, investing in AI companies is not different to investing in traditional industries where we solve real problems for real people and hope that we embed ourselves into our customers' lives forever. So with that, thank you very much. And please thank our panel, Matt, Robbie, Brent, and Steve.
Before we hear our next keynote speaker, we are excited to remind you that later today we'll be announcing the lucky winner of an exclusive getaway generously provided by our sponsor, Yangaro Resorts. For your chance to win this luxurious escape, be sure to stay with us until the end of the conference. And now, let's get ready for our next keynote speaker. Please join me in welcoming the CEO and founder of Collective Shift. Let's welcome to the stage, Ben Simpson.
Awesome. Hey guys, my name's Ben. And I'm going to be talking about crypto strategy in the next 10 minutes. Can I just get a quick show of hands who actually owns cryptocurrency? Who's an investor? Great. Who's never heard of Bitcoin or cryptocurrency? Everyone's there? Awesome. Okay, I've got 10 minutes. So I'm going to try and really quickly whip through and help you understand if you are investing in cryptocurrency, what a strategy may look like for you as an individual. Really, by the end of it, I'm just going to talk through some profit-taking opportunities, what are some risk-adjusted analysis of crypto, and also where are we in the cycle. Crypto is a very volatile market, so I'm going to give you some data to help you understand where we are in the cycle. Now, really, I'm going to really try and focus on people in this room. If you are a time-poor investor, if you're really trying to build a quality portfolio, I'll speak about my company in a second, but really we help people build a robust crypto investing strategy. We don't look at meme coins and 100x sort of investments overnight. We're really trying to help individuals build a large-scale portfolio, which I'll help you today. Now, who on earth am I? My name's Ben Simpson. I founded a company called Collective Shift. For those of you that are familiar with Morningstar, we're trying to build the crypto version of Morningstar. So 4 years ago, I founded this company. We're an independent analysis company, and I've helped over 10,000 investors invest into crypto. We're completely independent, so we don't have a token. I'm not asking you to invest. I'm not pitching you anything today. I'm just purely here to help you invest into crypto. I'm very passionate about helping people in the space. There's a lot of bad people in crypto, and I'm here to try and help you navigate that. I was very fortunate enough to do a TEDx talk a couple of years ago on crypto. So if you're brand new to the space, you can Google that. Just search my name, Ben Simpson, and TEDx, and you'll be able to see that video. We work with some of the world's leading brands. We're actually the leading research company in Australia. So you might, if you're in the cryptocurrency space, you might see these brands, CoinSpot, SwiftX, they're clients of ours. And we actually produce research to a lot of the major exchanges. Plus, we also have over 1,000 investors that pay for our analysis across the world. And you can check out some of our success stories and reviews online. So cryptocurrencies run in 4-year cycles. Just like the property market is like more of a 20 or 25-year horizon, crypto runs in 4-year cycles. So ultimately, as an investor, what you're trying to do is, find, the bottoms to invest and sell at the tops, right? Easier said than done. But really, we try and put out research to help you find those bottoms and those tops so you can invest at the right times. But you can also lose a lot of money in crypto by following the wrong advice and investing in the wrong periods. Cryptocurrency has gone down 20 plus times in the last bull market, 10 plus and higher. So sometimes you might see Bitcoin go down 40, 50, 60, 80% or more in bull markets when prices go from top to bottom, which is really crazy if you don't really know what you're doing. And this is a chart that basically showcases the volatility. So the different colors are the last 4-year cycle trends. So the blue, the far right, is the current cycle. And as the colored lines go down further, they are basically the corrections from the top to the bottom. So you can see in the black line, from January 12th to now, Bitcoin's basically gone from $1. We hit about 80,000, 75,000 US about a year or so ago. And on the way from $1 to 80,000, we've had huge corrections, right? So timing is really important when investing into crypto. Now, in terms of where we are in the cycle, the 4-year cycles are all built around what's called the Bitcoin halving event. So there's only 21 million Bitcoin that will ever be created. It's a limited supply asset, right? Similar to gold. That's why Bitcoin's been seen as a digital gold. And every 4 years, the amount of Bitcoin that comes into circulation halves. And that's basically where we get the 4-year cycle that we can start to predict prices. And in the different colored lines here, this is where we can start to predict the price of the asset after Bitcoin halving. So primarily, a bull market will kick off about a year or two after the Bitcoin halving event. And where you can see the line where we are now, this was the last Bitcoin halving only about 6 months ago. And then really we've probably got about 6 or 12 months to go before we start to see the peak of this cycle. Now, what's been the biggest impact on Bitcoin has been the ETF demand. So basically we've started to see huge institutional demand come into Bitcoin, and we've actually started to see more than 4.3% of the entire Bitcoin supply bought by the Bitcoin ETFs, which is huge, right? So we've never seen this institutional demand at scale. Now, whether you get a limited supply asset like Bitcoin and you're starting to see this huge demand coming in, we start to see the Bitcoin price go up. Now, the retail interest is really not here yet. In previous Bitcoin bull markets, the retail investors have been the one that's really pushed the price. They have not arrived yet. This is a chart that basically looks at the total number of weekly YouTube views by retail investors watching crypto content. It's down about 80% from the peak back in 2021. So really this move, Bitcoin's at about 60,000 as of 8 minutes ago when I last checked, really being pushed by retail interest, right? So once the retail do arrive, that's when we start to see the market really go on a really parabolic run and where you can make a lot of returns, right? So really now timing is really paramount. So really my strategy, I look at Bitcoin as one of the hardest assets on the planet. Bitcoin and property is something that I believe is the only real way to build wealth. And then with the other coins in the cryptocurrency market, so altcoins, there's thousands of other coins out there. You can use altcoins in a cycle to basically leverage up your position. And then ultimately my goal is to build my Bitcoin and property stack. So Bitcoin, I believe in the future will be in the hundreds of thousands, if not millions of dollars in the next 10, 20, 30 years. It's currently at 60,000. But we will see a lot of volatility and a lot of people lose money. And a lot of people specifically lose money on altcoins. These are meme coins or worthless coins that are promoted online that people speculate on and try and make massive returns. But ultimately, a lot of them just have zero fundamental value. They're like penny stocks. They have a life cycle, and you need to be really careful. Now, we've started to see much larger businesses in the US actually start to buy Bitcoin on their balance sheet. So MicroStrategy is a software company out of the US. It's listed on the NASDAQ. They now own tens of billions of dollars of Bitcoin on their balance sheet. So when you hold a lot of cash, every year with inflation, the purchasing power of your cash goes down 10 to 15% just through to inflation. So if you're a massive business and you have tens of millions or tens of billions of dollars of cash, you're losing 10% of that each year in purchasing power. That's why using something like Bitcoin as a treasury management system is a way to offset that hedge and offset the fiat debasement as we start to see, the US, print more money. The US is in the biggest deficit they've ever been in, $35 trillion worth of debt the US is in. They continue to print more money. We've seen Australia print more money. This is why prices of everything continues to skyrocket. Cost of living, everything's going up, and Bitcoin's trying to be a hedge against that. Over the last 10 years, Bitcoin's compounded at 60% year over year. Although what you see online and you see from the mainstream media, Bitcoin is one of the best assets still to date. Now, I really want to make it clear, Bitcoin is not cryptocurrencies, right? There's thousands, tens of thousands of cryptocurrencies. A lot of the cryptocurrencies are just completely, bad. Basically, they're worthless, right? So it's really important to separate that, right? There are some good altcoins, but most are pretty rubbish, and that's what we try and help and to deliver some research on. So really, we've got 2 minutes here. Really what we help at Collective Shift is helping you with your strategy. Ultimately, we tend to help more high net worth people with hundreds of thousands of dollars in crypto, where we sit down and really build a robust investing strategy. But as an individual, these are sort of the most important parts that I think is really important when investing into crypto. What most people do is they get really excited when the market's going up. Everyone's talking about crypto. Their next door neighbour's buying altcoins. They tell you to buy. You buy at the top, and then 4 weeks later it's down 40%. You panic and then you sell. Right? That's what most people do. Really about investing in crypto, for me, it's having a goal. Like, why are you even in crypto? If you don't have a goal, if you don't know what those goals are, it's really important to know that. And then your risk appetite. A lot of people don't or can't stomach, Bitcoin going down 20, 30, 40, 50%. Sometimes that happens in a day. And when the stock market moves 4% and Wall Street, wobbles, that's nothing for us, right, in crypto. 10 or 20% days are pretty common. Timeline, like what's your timeline? How long do you want to invest in crypto for? Well, the asset selection. So many people I work with come to me after listening to people on YouTube with 30, 40, 50 coins. They don't know what any of them do. They're down 40 or 50%, and now they want our help. It's much better to get, before you start investing and just following really poor advice online, getting a proper asset structure in place to ride the wave of the cycle and not get caught up in the nonsense. Sell strategy as well. Maybe a lot of you have bought crypto before it's gone up and then you've held it all the way down again. I'm not sure if anyone's done that in this room, but I speak to a lot of people. Probably 90% of people buy crypto, ride it all the way up, think it's going to keep going up, and then all of a sudden, overnight it's down. So having a proper sell strategy, automating that, and then having the psychology to match. It's pretty crazy working crypto. I've been doing it for 8 years. And I see people coming from the traditional world into crypto and basically are like, what on earth is going on in this space? This is a complete chaos. So having that psychology and ability to manage your money when the market's going up and down is really important. I'm bang on 10 seconds. So this is completely free. I don't think you even need to put an email address in. If you want our full 10-step crypto strategy process, that genuinely is free. I'm not even asking for your email address. Feel free to jump on that. It's a 10-step page document that sort of goes through and gives you resources to help with your portfolio structure, your buying strategy, where to buy, how to store. It's everything. And we use this with all of our members. And happy to give it away for free. And as I said, we're completely independent. So I'm not selling you anything tonight or today. Just wanted to give some value and hopefully help out. I'll be in a panel later and hanging around if anyone wants to come and chat crypto strategy. But thanks for your time. Cheers.
Thank you, Ben, for that insightful keynote. And now let's resume our third set of company presentations. Let's give a warm welcome to David Connolly, founder and CEO of Sustainable Fashion Ventures.
Wow, tough act to follow. Well-spoken, Ben. Firstly, thanks to Steve Torso, Jackie and the team. 650 early-stage investors in a room. It's nearly impossible in Australia. And thanks to everybody for being here. Without your support, entrepreneurship would be dead in the water in this country. So I thought when I named the company Sustainable Fashion Ventures, that'd be pretty unambiguous. But just this morning, talking about digital assets, it's pretty clear we can all talk about the same thing but mean different things. So just to sort of summarise what I've done before I get into the presentation without spoiling the quiz, my approach was this. The first thing I did was I acquired the most valuable portfolio of domain names in the history of fashion. The second thing I did was I registered the most valuable trademarks in the future of fashion. I then connected supply and I used AI-based sales and marketing techniques to sell jackets all over the world. That's kind of in a nutshell when we say, or when I say digital assets, that's what I mean, as opposed to say a crypto asset. Okay, so look, in the spirit of the Saturday morning quiz, which I'm a big fan of, I thought I'd just kick off with this and get everybody aligned to the commercial opportunity. So we're going after a product market, not a service market. That product market's 10.5 times the size of export beef and has larger total addressable revenues per annum than iron ore. Would anyone like to have a guess at what the market is? I'm dressed like a hillbilly, that's probably a good clue. Close. We got a player down here with jeans, that's certainly 50% of the answer. Anybody else? Denim, well said, that man. Denim, so every day 50% of the world wears denim. So the mission of Sustainable Fashion Ventures is to commercialise the world's most sustainable and durable 100% cotton denims. Okay. So look, there's a much longer than 8-minute pitch that you could do on sustainability in the denim industry. It's horrendous, as you would expect. It's a very price-driven industry, and that mentality flows right through the supply chain. The issues this venture is going to solve undoubtedly are the use of plastics in denim. I've got a great little demo out there at table 9 regarding sustainable denim that's water repellent. It's one example of removal of plastics from the fashion supply chain. Recycling, I'm not sure what you guys are like, but I basically have 3 holes in my socks before I buy a new pair. Every time we sell a jacket, we give them a prepaid shipping label to recycle their old one. It's a simple example of sustainability in this venture. And modern slavery and labour. So the factory I've sourced and audited, world class. Basically, the people are given a living wage. The factory conditions are excellent. It's really hard to describe the difference between that factory and some of the things I've seen in emerging economies. The opportunity. So, as I said before, the first thing I did when I kicked this off was acquire the most valuable portfolio of domain names in the history of the fashion industry. So really the opportunity here is to exploit those assets to create, a world-class sustainable venture selling denim online internationally and to be number 1 in denim online. To date, we've been able to achieve top 5 results in the United States with the prototype site. The use of capital includes rolling that site out to the 16 main denim purchasing jurisdictions internationally. The product, so look, this is a Series A raise. So the good news is the product has been sort of designed, built, tested, independently audited, registered, certified, trademarked, and it's very much ready to go. Out there at table 9, I've got 2 examples of that product, Green Tab Storm and Green Tab Stretch. These are 100% cotton denim materials which replace plastics in 2 main areas of that supply chain, being skinny leg jeans, which I'm sure everybody enjoys wearing. They've usually got about 3 to 10% elastine in there. We've got an equivalent 100% cotton material out there which you can come, feel, and very much replaces that without any compromise by the consumer. The Green Tab trademark, there's a great story there regarding litigation from Levi Strauss & Co. for about 2 years. Good news is we came through that in the clear and we have successfully registered the Green Tab for the entirety of cotton. Strategy. So just to sort of build on what I said earlier, the strategy here isn't to go around the world setting up businesses. It's very much to create a centralised team and achieve top 5 SEO for the products everywhere in the world, leveraging a single property lease and a single digital asset team. Localising the content. I'll talk to this in the second year of the 2-year investment sort of piece, but basically through the prototype site, we came up with ways to work with major influencers in economies that don't speak English to localise the marketing message using people who speak Cantonese, Japanese, Thai, Vietnamese, etc. Continuing to be the leading innovator in sustainable materials and processes, that's really building on the partnership with Cotton Incorporated that we've started with the 2 earlier mentioned denims, Stretch and Storm. Top 3 growth drivers. So if you look at the economics of a fashion business, it's pretty obvious it's got to go online. It's just no alternative. Denim at the moment is transitioning online at about 12.5% per annum. They only really started doing that during the COVID pandemic, but it's a trend that will continue. The venture holds top 5 SEO now, and obviously with the plan to continue marketing into each of these places in a very localised fashion, we'll retain top 5 SEO. Dominance of denim, as I said earlier, it's a $100 billion category in 5 years. It's larger than iron ore. So even if the venture only achieved a double-digit percentage of that, it's a very, very healthy, very, very profitable venture. And emerging economies are driving that growth. So whilst a lot of people are quite sceptical about can an Australian company compete in denim, very much so. China, Japan, Brazil, India, none of these countries really necessarily have a huge trade relationship with the United States. We certainly do. So 2-year plan. So I'll just pick one point out of the slide. There's not a lot of points setting up a global business in Australia. So I've gone and sourced properties in the north of Vietnam at a place called Hai Phong. Hai Phong is a port city. It's about 10 hours drive from China. It's a straight shot west on sealed roads to India. It's got access through free trade agreements to South America, most of the Asian countries and Africa. And the Vietnamese government's offered 5 years tax-free to establish there with an additional 5 years under 4%. So really one of the key pieces that will come out of this next wave of investment is establishment of a place there. Why there? Obviously the tax incentives are great. Really, just under half the world's population lives the distance of Melbourne to Brisbane from that place. So in terms of building a high growth denim venture, very much makes sense to move closer to the market, particularly with those emerging economies driving all the growth. The enterprise roles, if you're an AI sort of person, you'll really understand what I'm saying there. When you're selling 5-pocket jeans or trucker jackets, really the process whether it's a return, a swap, a warranty claim, whatever it might be. The processes are very, very similar and consistent. So using AI to make a really efficient business operation is easily done if you create enterprise roles from the word go, which we have. Year two, this is sort of what I touched on earlier, building a world-class digital asset production facility. So if you think about like small movie sets, each culture around the world has sort of traditional aesthetics that we can put into these movie sets and bring in promotional partners to build content, which we can then go back out and share digitally via TikTok, YouTube, Facebook, whatever it might be. That's really the major outcome of year two. 10 seconds, the button stopped working. Here we go. Okay, invest. So, like I said, Series A, 500,000 shares, $10 a share. Use of funds, building a world-class digital denim sales and marketing team. Use of funds, marketing, facility salaries, and the balance being a pretty standard corporate expenses. Button stopped working. Thank you.
Thank you, David. And now please join me in welcoming Brent Barnes, CEO and Managing Director at LBT Innovations.
Thank you. So we are a publicly listed company on the ASX. So ticker code is LBT. We're based in Adelaide. We raised capital at the end of last year. So coming here not to raise capital, so a bit different to perhaps other pitches, but we are at the at the bottom of a mountain of opportunity ahead of us, kind of moving through the technology innovation into kind of early commercializations and some really great early wins that we've had. So I thought I'd start to say, look, we're an image analysis company, and this is a bit of a kind of, interesting one because it's a bit more, perhaps fun than looking at petri dishes. But the point of these slides when we look at muffins and chihuahuas and potatoes and pit bulls is the importance of data quality. It's also kind of cool looking at chihuahuas and, muffins because they look more alike than I would have originally thought. But the teams quite enjoyed putting that together and putting faces on potatoes as well. But the point here is that from an AI-based perspective, data quality is really important, and getting access to the right data is part of that kind of machine learning process. So kind of pivoting into what we look at, these are the things that our company looks at every single day of the week that we're developing technology for. So perhaps a bit less interesting than chihuahuas, but we love it. And in fact, there's some really cool pictures. If you go to LinkedIn and have a look at some of our company posts, it's quite magnificent, some of the various kind of bacteria and fungus and all kinds of funky stuff that grows on these plates. But what you can see here is pictures of plates. You can see colonies that grow on the plates, and kind of on the bottom of those, the bottom plates are little bounding boxes. And so that's, if you like, our AI-based algorithm that's automatically interpreting the growth on those plates and counting it. And the focus area that we kind of have this application is pharmaceutical drug manufacturing. And so when you think about large-scale biologics manufacturing, kind of the headline here is microbiology is the drug manufacturing gatekeeper. And so why does all that matter? Why do those little culture that grow on a plate, what does that make a difference? Well, it makes a difference to release safe and effective drugs into the market. It's a critical control point in order for that batch of sterile products to be released into the market. And so when we think about culture plates, we're thinking about clean rooms with people with bunny suits, a lot of money goes into making sure that environment is clean by definition, incubated, and then it's read. And so most of the time there's nothing growing on the plate as you would expect, but it's super important to identify any growth that is on that plate because it relates to releasing drugs into the market. And why it matters. So, why would automation make sense? Well, in every single sterile drug manufacturing company globally where drugs are made, they put these plates in clean rooms and they read them. They actually read them by 2 microbiologists. And if you think about it, well, what if something goes wrong? What if they don't identify? What if that quality record has some kind of mistake? What if I read the plate in the morning, I was a bit hungover from the night before, and I missed that plate? Well, that's why they've got 2 microbiologists as the second point to test the plate. And so, the cost and the implication of getting things wrong can cost millions of dollars. And that's why Our customers are really interested in what we're doing when we say, we can automate in a more effective and more efficient way than what you're doing at the moment. And so if you look at that plate there, and that's a dirty plate, right? That wouldn't come out of a Class A or a Class B clean room, but it would certainly come out of a Class C or a Class D clean room. You've got a higher degree of subjectivity when you're looking at the various growth on that plate. It's time consuming, and there's a bunch of data that shows that you're going to get results that are inconsistent. And so with all of that kind of context, what we decided to do, probably nearly eight years ago now, is to develop a technology to provide automation of this culture plate workflow. And so we've got a physical instrument that you can see on the screen, but really where our unique IP is all in the middle part of that instrument. It's the image and the image analysis platform. And so what we do is that we take a photo of the plate and we train the algorithm to interpret what's growing on that plate, and the system makes an autonomous decision. So based on the photo, based on the colony count, it will then move that plate automatically to the right-hand side of the instrument. So you're kind of physically separating the plates that have growth and those that don't have growth, and you're digitally passing all that information into the laboratory information management system, removing all of that manual interpretation and removing all of that manual data entry that occurs, like I said, in every single drug manufacturing site globally today. And the great thing about an algorithm, it's really the perfect application when you kind of think about a high volume, highly repetitive task. So there's 39 colonies on the plate. You put that plate through our system, it will identify the same colonies the same way every single time. We've done studies. We give that plate to 5 different microbiologists, or plates similar to that to 5 different microbiologists. You're going to get 3 to 4 different results every time. So we know, industry knows, there's data that's published that we have variability in the current process of culture plate reading. And on the commercial side, so, if I convinced you of the fact that it's a problem and we've got a technology to solve the problem, well, how do we sell it? That's kind of where we're at now. So that's, from an investment side, think about kind of, well, what's that stage at? We're early commercialization. We only introduced this product, validated that the technology worked in March of this year. And we announced a couple of weeks ago that, AstraZeneca had been looking at our technology for a little while. And after, kind of doing a validation of the instrument in one of their facilities, purchased 5 instruments. So I kind of call it a land and expand strategy. We've got one customer, that's AstraZeneca. We expect this to be an initial order for them to start rolling our APAS Independence product out through all of their largest manufacturing facilities globally. So this is a really kind of great start, right? Getting 5 of those instruments done. That's about $4 million of revenue or thereabouts, depending on kind of the level of service that they will offer. The pictures up there, incidentally, is Andrew from AstraZeneca presenting at a conference earlier this year in Europe. So not only for us is it a great result to kind of have that order, we'll end up fulfilling the order over the next 6 months, but we've got someone who's advocating, a market leader, AstraZeneca, advocating for the technology on a global scale. So kind of wrapping up here in the last minute, add LBT to your watch list. We've just kind of finished this AstraZeneca deal. It's an important one that proves out the commercialization strategy. We've sold 7 instruments. So there's 2 others that we've sold to. Thermo Fisher, another large contract drug manufacturing organisation. Novacina is another CDMO based in Perth. And we also announced recently that we've got 2 other evaluations with, think, the top 10 largest pharmaceutical manufacturing companies by revenue. So those evaluations started in this current quarter. Similar type of profile, if you like, of AstraZeneca, with a propensity to kind of execute that land and expand model that I spoke about before. So a real opportunity, we believe, in obviously a biased way, that there's a great value creation opportunity here. And for us, it's all about the next 12 months to think about us delivering on the orders that we've got, expanding the customers that we've got in our pipeline, and moving this company into a cash flow positive position, which we're expecting in the second half of 2025. Thank you.
Thank you, Brent. Now let's move on to ForSense Technologies. Please join me in welcoming its founder and CEO, Glenn Wayland.
Good afternoon. Well, it's a story of peas, really. Not these peas, though. These peas. presence detection, people, property, places, physical retailers, proximity and presence detection. That's what FourSense is all about. And about 8 years ago we started, and we started on the premise, on the whole vision, to give physical stores and physical commerce the same tools and weapons that online has had since the beginning of time on the online digital world. Because stores, physical stores for many, many years have been battling against that whole concept. So FourSense, if I got that right, the artificial intelligence is that we're leaders in presence detection and sensor technology, and we drive actionable intelligence. So the whole of today is about data, and we know, we all get it. Data is the gold. But more importantly, if you can give physical stores and commerce the ability to use that data and to get that data in real time and to use artificial intelligence, then more importantly, they have a chance to compete against online. So FourSense is very much about seeing tomorrow, and we sense and we see and we do. And we're in various markets and verticals at the moment. We're being drawn into that. And yes, over the many years of being research and development, our tech hub here in Sydney, we've created and designed and implemented some quite amazing technologies. So, if I get this right, the global problem, as I've just stated, is that physical stores have been battling for many, many years against online. And so we created our own product range, and we're quite unique in that we manufacture our own sensors here in Sydney, and we design our sensors per healthcare, per elderly care, per retail store, per shopping centre. And our AI perception identifies people with such precision that we're disrupting many global sectors around the world, from retail to healthcare to digital. For decades now, behavioural data has been collected and analysed in the virtual world in the most minute detail. So FourSense is about seeing data so you can see tomorrow. So FourSense created a platform and technology that gives physical stores and retailers that very ability to arm physical stores with online tools. And here I'll show you, this is that data of a shopping centre being put through our machine learning. And that shows you the shopping patterns, and we've used bots so that you can be able to determine shopping patterns and behaviours, and what colour is one bot goes into one store, into a news agency, into a hairdresser's, into what have you. And so that's very important that you have this data, because that data increases the value, just as all of these companies, wonderful companies today, talked about the data and crypto and all of those wonderful things. But a company can increase its valuation specifically by showing its data over the various years. So we're uniquely FourSense, and we've been around for 8 years, and now we're rolling out. It's very exciting times for us as we're rolling out globally contracts that will give significant revenues. Okay, so what does pool, it's another P, but what has pool got to do with FourSense? Well, some years ago, the World Pool Association, that's billiards and cue balls and snooker, came to us and said, could we, FourSense, create the world's first physical ball time technology that will enable ball placement in one country while a player is playing on a physical table in another table. So there's over 750 million people that follow pool. And so that's an amazing market for us. So they came to us and we created that technology. That technology here you can see in its infancy in our tech hub. So that ball placement technology was created during COVID. And what that means is a physical pool champion in America can play another pool champion in China in real time on physical pool tables through our technology. And through our technology, the ball placement is exact. And so we have that 10-year license and agreement with the World Pool Association. And so out of that became this amazing thing. Well, we're into presence detection. We're monitoring people, property, places, everything physical. The opportunity came for us to launch a global product, which is what we're doing. So that presence detection technology has enabled us to create a technology to the 750 million pool players around the world and followers. And believe me, they are the last bastion of sport. Consider pool like UFC. They are very strong followers. So we created this technology, and from that, we've created a particular product that And I guess you liken cricket to World Series cricket. Through the World Pool Association, we've created World Pro Pool. And the top 10, 20, 30, 40 players each year will play online and will be digitised to your mobile device in 3D in real time, complete with commentary. After that, you can pay another $1.99 and you can play the game again on your mobile device. So this is a huge market for us, and we've created World Pro Pool, which will mean that a considerable subscription straight up the last quarter of this year. So we've got two levels of revenues following from that. More importantly, it gives us the ability to target that particular market. The World Pro Pool, which is the official site globally, has also signed with us an agreement to manage their fan base. And some of these pool champions have 4 million followers. And we will be promoting that, and there'll be subscriptions, revenues from that as well. As you can see, online through our technology. So we then created a home box. And the idea of a home box is like a golf box. And there's so many millions of people around the world with pool tables. This particular unit that we've created is a home box, and it'll enable you at home to play anybody in the world with a home box in real time, in 3D, digitised to your iPad, TV, whatever you like. It will then also enable you to train, to record your games, and we estimate significant uplift in the revenues of this in the next 12 months. I am also talking and had final discussions with the world's largest pool and manufacturer of pool tables in China, and looking at a global deal as well. So we then have pool halls, really pool halls, 200,000 in China, 35,000 in America, around the world millions. And so we've created a pool hall box, swipe your credit card, there's your mobile device, QR code, and your game is recorded on your phone. So we have a whole host of technologies, if I can flick through because I'm running out of time. We also have a contract to produce a national digital wallet across Australia for the Australian Lotteries News Agency Association, incorporating our technology. And there is our tech hub. So we're ready, set to go with global contracts, massive market size for us. The last quarter of this year is looking incredibly busy. We've also created in America roof leak sensors, and we'll be rolling that out. So we're not just a pea in the pod. We're a golden one, and we've been very lucky, and we look forward to rolling out. And I look forward to seeing you over there later on this afternoon. Thank you very much.
Thank you, Glenn, for that interesting presentation. Now, please join me in welcoming Richard Rendell, CEO at Biosignals Diagnostics.
What do we do? So we aim to save lives through precision healthcare, to predict, diagnose and treat cardiac disease, the world's biggest killer. So to do that, we need an array of skills and experience, and in particular experience of clinicians. People who have had, and continue to have responsibilities for patients in their daily lives. Stephen Foy is an accomplished cardiologist, and I'm very proud to say he's my co-director in the company, and a lot of talent in there as well to get us to where we have got today. I would suggest for investors that if you're considering looking at companies to invest in healthcare with AI as a component, that clinicians are a critical component of the mix of talent you need. So, heart disease is the biggest killer in the world, predicted to double in the next 20 years. It is a complex landscape. Every 3 hours a woman dies of a heart attack. And the complexity of this is that the symptoms are often different. No pains in the arms, just a feeling of nausea, dizziness, and often go to lay down and it's actually a heart attack and never get up again. This happens, there are examples of it. 2 out of 3 adults with diabetes will die from a cardiovascular event, and we actually look at glucose all the time, but we don't monitor for ECG. We have a fix for that. Atrial fibrillation is known to cause 30% of strokes. It's prevalent in the over 50s. Chronic stress leads to cardiovascular disease and disabilities, an exciting area for us today as we're launching some of our disability services. And they have intense cardiovascular and neurological impacts. Overall, early detection through ECG monitoring, comprehensive and accessible, saves lives. So Biosignals is both a medical device producer and a healthcare services provider. We actually produce this little medical device. This is a Class 2A TGA approved device, CE mark as well. And it's a handheld ECG and it's a wearable as well. So we can switch across to being a wearable. And that, as well as our clinicians, are accessible through our platform, through the app. So it all sits on the MapDX platform. And what we're doing here is to take precision patient management to the level of making it very directed towards the individual. And our approach is to use mapping between the ECG profiles and diseases, and using various data types and sets which are basically tailored to the people to build those machine learning models. The machine learning models are then put into a consensus algorithm which allows us to make decisions based upon predictability around people like you. And we talk about data. The selection of the data needs to be consistent with the person that we are actually trying to diagnose or predict something on. There's no use in using a different ethnicity or gender. In many cases in biology, that will give us the wrong answer. And so this is how we actually make AI more accurate. So it gives us a market opportunity there, an unfair advantage in what we're doing, so to speak, mapping ECG profiles to diseases, including disabilities, as we're doing now. We just became an NDIS provider. That was 5 months worth of hell and an independent audit, and we finally got to the point of now being a provider, which is great, just in the last 2 weeks. We're working with allied health partners now to be able to put the device in the hands of physios and OTs and others who visit the disabled people and be able to conduct rigorous testing for us to be able to then track them. Elsewhere, we have clinical practitioners, so GP clinics, we have cardiology practices and post-operative cardiac rehabilitation. Kaiser is a big project there. Remote and rural, of course, the little device actually lends itself to that. And VACA Health in Africa is one place where we're doing those remote kiosk services. So business revenue, service model for us is based on two parts of that little device. The service model is based around $1,796 a year. That is a full suite of tests every month and 4 cardiologist reviews per year. That's 376 million ARR in 2029. The other way that we make money from this device is it's a direct to consumer. You can buy it on our shop. It's $172 plus GST and $10 a month. What you're seeing in the lower half of that slide is actually a 3-lead device. This is clinician use only. And clinicians would typically pay around $5,000 for similar devices today. When we innovate with this device, we innovate in a commercial sense as well, and we will give it to them for free. And we will basically charge each time that they use the device, and in the US, 11 million of these uses or these patient Holter monitor runs are done each year. So we get some very healthy numbers on just a very small amount of the market. So I mentioned disabilities, and these are the dozen disabilities that have very intense impacts on cardiovascular or neurological health. We map in our database those kind of effects and the medicines that are used in the treatment of these particular disabilities. Business revenue model is effectively this for disability services, very small amount of the market, 10% in 2029, 139 million ARR. Overall, we are effectively giving greater quality of life to patients within disabilities, and we ultimately will save the government some money. So, last slide. $650,000 is our current pre-Series A raise, and that is on a 24.6 mil valuation. It is here for one specific purpose, to onboard the money. In other words, to bring revenue into the company through onboarding the current set of NDIS and aged care providers that we have in our database, about 30 of them, and we need to get moving on them. So increased capacity in the database. We have both the UAE and Hong Kong also working with us at the moment to do some international expansion. Thank you very much. Please drop by and see us outside. Get your ECG taken. Only takes 30 seconds. Thanks very much.
Thank you, Richard. And now let's gear up for our next panel session, who will be taking us through the digital asset investment trends. Please join me in welcoming our moderator, Lucy Lin, founder at Forest Lin, and our panelists, Henrik Andersson, CIO at Apollo Crypto, Jamie Kennedy, General Manager at the OKX Australia, Eric Shaw, COO at BetterX, and David Mack, Business Development Manager at DigitalX.
Hello, everyone. You can hear me. Thank you so much for coming. Hopefully you're having a great day so far. Thank you so much. We are the Digital Asset Investment Trends panel. Hopefully you've had a fantastic day and ready to learn some more insights about digital assets. So I've got a fantastic panel with me today. First, we've got Hendrik from Apollo Capital. We also have Jamie Kennedy from OKX. And we also have Eric Chow from BetterX. We were having a chat backstage just now, and we've got some good things to tell you, so be ready. First and foremost, I want to make this a little bit more exciting, a little bit more fun. Hendrik, can you tell us a little bit more, maybe a fun fact? Let's start off with that. I'm throwing this, by the way, to you. A fun fact. And also let us know, how did you get into the digital asset investment space as well?
Yeah, so a fun fact related to digital asset might be that I missed out on the Ethereum ICO. So I actually got into Bitcoin in 2013. I was working on Wall Street. I worked 15 years in traditional finance. Got really excited about Bitcoin as a breakthrough in computer science. And I started following the space very, very closely at that time. But somehow, I saw this very young Russian guy named Vitalik, that this crazy ICO about this kind of new paradigm doing smart contracts. And I didn't believe it at the time. So I don't know if that's a fun fact or a sad fact.
No, it's a fun fact. I was just saying backstage, I was living in Canada at the time, and I was hearing a lot about Vitalik as well in 2014. I actually have an Instagram picture of me saying, should I buy Bitcoin? And I have to say, one of the biggest regret I have in life is that I didn't buy it 10 years ago. So
Yeah.
So tell us about how you got into the space.
So I kind of started following the space very closely 11 years ago in 2013, and saw this as a new paradigm in basically a breakthrough in computer science, kind of enabling true ownership of digital assets. We saw the launch of Ethereum and smart contracts and what they could do for mainly decentralized finance. And then sort of started to realize that this is a new investment class, or basically a new way to invest as well. And in 2017, started Apollo Crypto here in Australia as one of the first firms in Australia focusing on digital assets. So I've been doing that for the last 6-7 years.
And I met Henrik in about 2017, so we go way back. Welcome, thank you. Jamie, tell us your fun fact. He's just a little bit thrown off, that's okay. But tell us your fun fact.
Well, at least I had some spare time to think of my fun fact. And this might be, a little bit about how I got into crypto as well. But I grew up on a farm. So I grew up 3.5 hours west of Sydney. And so I really got into crypto when I was working for government, so Treasury in Canberra. And one of the things I was working on was the review of ICOs. This is probably a while back now. And so if you go and read that paper, there are some farm-themed examples in there. So see if you can spot those and you can guess which ones I wrote.
So all the farm ones are you then?
Yeah.
Okay, great. We'll do a Where's Wally on that then. Tell us, how did you get into crypto, or how did you get into digital assets?
Yeah, not as far back as 2013. That's quite a Bitcoin OG there. But at the time, I studied economics and finance. And then, when I was, as all good economists do, you trundle off to work for the Treasury or the RBA. And we were sort of looking at this thing called Bitcoin, I guess, at the time. So this would have been around 2017, as a whole bunch of ICOs were coming out. I just found it fascinating because we're sort of taught in sort of ordinary economics that inflation is good, maybe not the level of inflation that we're seeing right now, but some inflation is good. Yet here was sort of an economic system where it was deflationary. And so it was just very interesting that people were looking more and more into this asset, despite conventional wisdom and training telling us it's probably not the right way to go.
Fantastic. Eric, would you like to share what your fun fact is? You've had loads of time to think about it now.
I used to be an industrial designer, studied that in university. One thing that got me into crypto, kind of back to my roots, was the application of technology and how it's applied in the market. So digital asset isn't any different to any other type of new technologies. You're literally taking one application and applying it to a new industry or a new trend. That's a bit of fun fact, but I got into crypto 2017-18. Our largest shareholder, Aura Group, they started an OTC trading desk, which they seeded. We're basically trading for high net worth clients. Fast forward to where we are today, we're a platform as a service, which offers businesses, institutions, and companies a gateway to offer crypto to their clients. So that's how I got into crypto.
Yeah, fantastic. Thank you so much. So we're here to talk about trends and looking into your crystal ball to the panel. What do you see as the next big trends that you see in development that you believe will significantly impact investors in this space? Potentially, how should they position themselves to benefit from these changes as well? So Henrik, what do you think are the big trends?
So one big trend I see is kind of making it much easier for retail to onboard to crypto, because it can be quite hard today. I think a lot of the infrastructure, a lot of the scaling solutions have been built out. A lot of decentralized finance have been built out. Bitcoin has been around for a long time, but it's still kind of hard for kind of the average person to interact with crypto. So I think there's a lot of development happening in that space at the moment. So you have seen something called smart wallets. Coinbase is working on Coinbase Smart Wallet. They're looking to onboard a lot of people onto that technology, which will make it much easier kind of to set up a wallet, to back up your wallet, and those kind of things. Here in Australia, there's a company called Infinex that is working on using passkeys instead of seed phrases, making it much easier to onboard to a crypto account, if you like, because the goal of this industry is to onboard people to decentralized systems. And so far, most retail participants have been using centralized exchanges instead of the solutions that exist in the decentralized world. But to be able to kind of onboard hundreds of millions of people, we need much better solutions to do that. So that's a trend that I'm seeing, a lot of things happening in that space at the moment. So that's, I think, is super exciting.
Yeah, I think that's a big one, because one of the hardest things is to try and get, like, in terms of more mass audiences to come in, you have to make it an easy process, right? So that's definitely an important trend and development. What about you, Jamie? What do you think is the biggest trend or development?
Yeah, it's an interesting one, and somewhat related to Henrik's point as well. I think obviously we're a centralized exchange, but ultimately at the end of the day, we see ourselves more of a Web3 play, I guess. So I think we're sort of seeing where things are going to go to is people are going to be interacting with digital assets and with crypto from both a centralized and a decentralized perspective, but not really, not knowing that they're operating in the decentralized in sort of field. And that goes to things like Henrik was saying, like smart account, smart wallets. These are sort of products that we're building out as well. And I think, for us, we do see a move towards, I guess, decentralization. But centralized exchanges, I think, our view is they'll still continue to play a role in the broader ecosystem. You're still bumping it up against traditional financial rails, for example, and you're still sort of having to interact a little bit with that side of the world. And things, for example, like zero knowledge KYC. I think there's probably a panel later on today which will probably delve more into that as well. The analogy I give, if we talk about Wally, it's like, how do I prove that I know where Wally is without actually showing where Wally is, right? Which is sort of a simple analogy for zero knowledge proofs. These are the sorts of things that we're sort of looking at exploring and looking at building, and that we think will probably end up in a world where people are interacting with digital assets, but not necessarily knowing if it's centralized, decentralized. It's all just one big ecosystem.
Fantastic. I'm going to be thinking about that. Where's Wally analogy now? Eric, what do you think is the biggest development?
Yeah, so probably would have seen it out in media, but RWA, so real world assets, basically being tokenized. I think that's going to have a major impact on how we all operate. So whether it fits from financial services to assets that we currently own, things that and trends that I think we'll need to really pick up on is the regulatory side, but also reporting how the assets are stored. So fractionalized assets, who's storing what, how's it being stored, how's all the reporting going to be broken down. All of that, I think, will have a big impact, and that's a huge trend at the moment. On the higher end of town, so most of the large investment banks and banks over in the States have already incorporated some form of digital assets into the ecosystem. A lot of it's still behind the scenes, but a lot of it is and related to RWAs, which is real world assets at the moment. So that's a huge trend that we're seeing in the market.
Yeah, definitely. There's a lot of talk about property, right? It's definitely one
Property,
thing.
private debt. So even ourselves, we've got a pipeline of about 50 mil of private debt that we're tokenizing for one of our pilot customers. We've done gold and silver as well, and we've also looked at luxury goods. So yeah.
Yeah, very exciting. Well, Australia wants to be recognised as a crypto and blockchain ecosystem country. So I do think it's fantastic, but it's also lagging as well. So maybe we can talk a little bit more about that. So where do you see Australia succeeding, and where are we lagging in comparison to the rest of the world? And where do you think the most opportunities are?
So we've actually seen a lot of activity in Australia. A lot of exchanges, for example. We have two kind of representatives here on the panel today on that side. We have seen a lot of projects as well coming out of Australia. I think, and we have kind of the 4 banks, many of them kind of playing around with AUD stable coins, things like that, but they actually haven't launched anything that is kind of live for the public. And I think one reason is probably uncertainty and sort of regulation and uncertainty around that. So I think if the government kind of really wanted to kind of have the innovation happening here in Australia, then we need more clarity on that side, because that's probably what's stopping, for example, the banks launching AUD stablecoins and other players in the industry. And actually, we have gone sort of backwards in the last 12 months, I think. I think it's very hard now to transfer money to crypto exchanges if you want to buy crypto. I think almost all the banks kind of put caps on transferring money to crypto exchanges and things like that. So it's actually been getting harder to on-ramp into crypto. So unfortunately, we are going the wrong way at the moment.
Is there any positives? Like, do you see any opportunities or anything that we've done well?
Again, we have seen a lot of innovation coming out of Australia. When you look at projects coming from Australia, I think many people are not aware of how many projects and what kind of activity we have coming out of Australia. So I think we've been doing really well compared to the overall population in Australia to kind of what we have kind of launched from Australia. So we've done a really good job, but yeah, with the right kind of regulation, I think we could do much better as well.
Yeah, I think we've got some really good projects and teams here. It's just probably some more regulatory advice Shame you're not in the Treasury anymore, Jamie. You could be leading that. But what do you think we should be like in terms of Australia? What are we good at? What do we need to be better at? What are the opportunities?
Yeah, definitely more fun being on the other side. No, I think, I think I would probably, echo Henrik's point a little bit in that we do have a lot of good projects and a lot of good builders in Australia that are doing very interesting projects. I guess a little bit like the Olympics, we tend to punch above our weight when it comes to sort of projects and development.
18 gold medals.
18 gold medals. In sort of the development capability that we have in Australia. So there are a lot of projects out there you wouldn't know are actually founded by Australians. I think, as a sort of new exchange coming to the market, some of the challenges I guess we're sort of facing in terms of, launching that, Australian dollar backed product is this sort of regulatory uncertainty that we've got, which, as we look forward, we'll probably see some sort of regulatory framework come through in the next 12 months. And really we're hoping that sort of gives a bit more clarity to the industry as well and the market participants. And hopefully makes the banking situation better for everyone that's involved. But yeah, like just to reiterate, I think where the really big challenge opportunities are depth of projects. I think potentially the unfortunate side of this sort of regulatory uncertainty is you do often see these Australian founders then moving to overseas jurisdictions. So you can sort of see some of the benefits that regulation brings, where some of them are moving to places like Singapore, or they're moving to places like Dubai, where they're bringing these sort of regulatory frameworks. So I think that in itself presents a whole bunch of both opportunities and challenges for the sector.
Yeah. Why do we always lose our best, athletes, musicians, actors, scientists? Anyways, Eric, what do you think about, opportunities,
Yeah.
successes and...
I think back to one of Hendrik's points around identity and KYC, I think that's a huge opportunity for us, but it's actually been really unfortunate as well with all the recent hacks around, Medibank, Optus, but it has pushed the government to push basically the national identity framework forward. And a lot of players are looking into that pretty seriously now to basically accelerate onboarding and KYC. One of the biggest issues with banks and why they block crypto is because of scams. Most of the, transactions related to scams are unfortunately crypto related, but then you've got guys like us who are the players who want to do right in the industry and also want to do well. But I think that's a huge opportunity for Australia to basically accelerate up on the KYC front. Yeah.
Yeah, I want to go through that because I think the scams are really interesting. It said that Australia lost 1.3 billion with a B dollars last year in phishing and investment scams. ASIC has announced it's taken down 615 cryptocurrency investment scams in the last year, which is about 9% of all phishing and investment scams in total. I think scams could be an issue in this space. And how do you see the regulatory landscape, because we were talking a bit about that, in Australia and globally impacting digital investments? Potentially you can talk about scams, but what should investors be mindful of? Henrik?
Yeah, I think the vehicles are becoming better, right? So it's getting easier to access the crypto asset market. So I think will kind of partly solve things, right? So in the US, we got the first spot Bitcoin ETFs in January of this year. So that's a much easier way to onboard a lot of people to this asset class. It's been the most successful ETF launch ever of any kind of ETF. So we've seen around $17 billion worth of inflows into the Bitcoin spot ETFs so far this year. And we recently got the Ethereum spot ETFs approved as well in the States. So I think that kind of clarity helps a lot. The industry has been working already 10 years plus to make that happen. And I think that's a watershed moment because now financial advisors can much easier allocate money into crypto assets. And we'll soon see kind of model portfolios being constructed that includes Bitcoin and Ethereum allocations, and that will happen through these ETFs. So I think that's one way kind of where regulation can help the industry move forward.
Great. Jamie?
Yeah, it's certainly an interesting one from an exchange perspective as well, and it's a challenge I think all exchanges have been facing. I think it's been a lot of good work obviously done by the regulator and also by the government with the the National Scam Centre, and so I think the opportunity here is more of that whole of industry coordination between the different different players, be it like social media platforms or banks or crypto exchanges, and so I think that's something that as a country, we're doing increasingly better, specifically given the significant drop in scams and losses to scams last year. As an exchange, this is always a challenge we face, and we put in place a lot of internal risk controls, and this is something that we take certainly very seriously as well. Because we are aware that the banks and certainly the regulators are very, very sensitive to scams. So I think it's a situation that is increasingly getting better over time.
Can you tell us about some of the things that you're doing from an exchange perspective?
Yeah.
Putting these controls in place.
So I guess as we're learning more and more about our users, we're certainly figuring out some of the patterns that make for a good user or a user that is potentially being scammed. Even just simple things like if a lot of this activity is happening on chain, you can actually look at where the funds are being sent to. If the funds are potentially being sent to somewhere which has been flagged as a scam address, just reaching out and saying, hey, what's with this this transaction that you're making? Are you aware that this is potentially a scam? And we should take advantages of the fact that there is transparency on the blockchain and that we can actually see some of these transactions moving. And sort of building, I guess, blockchain native control systems around this as well.
Yeah, great. What about you, Eric?
Yeah, so one thing around crypto and scams, a lot of people associate crypto directly with scams, but it's actually the humans behind it, basically, causing the scams, not crypto or the blockchain networks. So that's pretty, I think
telling me there's greedy people out there?
Well, basically, yeah. It's and in the media, a lot of it's played off as Bitcoin's a scam, Ethereum's a scam. But I think after the approvals from the ETFs and also your large fund managers, even like Fidelity, your balanced portfolio, you have the option to add Bitcoin in there now, right? I think it gives a big rubber stamp of approval to say that Bitcoin and Ethereum, more specifically right now, are not scams or projects that are scams, because these large institutions are pouring billions of dollars into them. But I also think that the media has a huge part in playing for a lot of these victims as well. If you would have asked a lot of people 2 years ago when the market was collapsing, crypto was a scam. Now it's come back up. Crypto is a safe investment because BlackRock and all these fund managers now investing into it. So a lot of the market, and we see this through our platform as well, a lot of people get FOMO, which is fear of missing out. They get sucked into these schemes and programs, which is really unfortunate. But there's a lot of things that investors can do. So, make sure that if they're Australian-based, they're ASIC registered, AUSTRAC registered, and also, like Jamie said, the blockchain is really transparent. We have what we call KYT, which is Know Your Transactions, which is a lot more transparent than your banking SWIFT transfers.
How do you think media is to blame? In terms of you should be scared, you should be excited.
I don't think they're to blame, but they're part of the equation because their model is for eyeballs and views, which then attract the people to get fear of missing out. And we experienced this ourselves, where people get really excited and they make irrational decisions and then they fall victim to scams, because then they come to us asking how do they resolve it, which we try, but a lot of the times it's unrecoverable.
Yeah. Okay, fair enough. Next is my favourite question. So I was watching the Olympics. I'm pretty sure most of the people in this room was too. 2 weeks I sat on the couch, and I've probably got an imprint on my couch. And I was wondering if there was a Crypto Olympics panel, what would the name of the event or sport you would like to see? Henrik.
Yeah, Lucy, you were kind enough to give me this question in advance. So
Yes, I warned you.
Actually, I asked AI about this question.
Oh.
So this answer is from Grok, fun mode.
Okay.
So Grok came up with 2 suggestions. A crypto sprint. Athletes would race to complete the transaction on the blockchain. The winner is the one who can confirm a transaction the fastest, dealing with the notorious waiting for confirmation time. So that was number 1, crypto sprint. Second one, decentralized dance-off. So competitors would engage in a dance-off where the moves are dictated by the volatility of various cryptocurrencies. The more erratic the coin's price, the more wild the dance.
Oh my, I love it. That second one was one I was thinking of. You know, I gave it a name.
Oh, really?
Yeah, it's called the block battle is
Oh,
what
wow.
I called mine.
Good one.
What do you think?
Not bad.
So I was thinking we can call it breaking. It's kind of like because, you know, breaking's only in Paris,
Australia
not in
didn't-
LA.
No?
Oh, okay, that's going to be another topic. But yeah, same thing. Like, you know, we're not doing a breaking anymore, so we can have a dance off. I think that'll be kind of cool. Jamie, did you consult AI with this question?
I did actually, but, but I don't have an AI answer for you, and I decided not to give my breaking answer either. No, I think the closest sport, which I was actually spent quite a while watching on the couch as well, that's probably the closest equivalent to how I feel this industry goes is speed climbing.
Oh, I love that sport.
Did you watch speed climbing?
Oh my God, I
Just
recorded it.
the amazing pace at which people like go up that rock wall. I feel like
4.6 seconds.
I feel like that's sometimes the speed at which things get developed in this sector. Suddenly, you know, a couple of months later, this whole new trend comes out, and you know, you never heard of this, and then all of a sudden it's taken off. That's sometimes how I feel.
Yeah, crypto is like so fast. I don't know how everyone here still have hair because I tell you what, it's breakneck speed, as you say. I agree. Eric, what's your crypto Olympic sport?
Only had about 10 minutes to think about this.
Yes,
before.
he was a ring in.
So it would be called long or short, basically with crypto. You know, a lot of the tokens that are new that get launched, very highly speculative, and the sport would be able to say long or short. Yeah.
Very good. For 10-minute work, I think that is not bad. All right, final question. What keeps you excited about this industry? Henrik.
Yeah, for me, it is onboarding the next 100 million people to decentralized systems. Like, I think a lot of infrastructure, again, has been built out when it comes to kind of the layer 1 blockchains, the kind of the scaling solutions, and now we're getting the wallets, and kind of the goal is to make it very easy to onboard a lot of people to decentralized systems. I think it will be Bitcoin as a digital gold, stable coins for payments, and the final leg will be kind of DeFi for decentralized finance. So onboarding kind of the next hundreds of millions of people to decentralized systems in those areas. That's what I'm super excited about.
Fantastic. Great. Jamie, what excites you?
I guess, you know, again, sort of what gets built in this space. I'm always just constantly, always, you know, the surprises that come out, I guess, for me, what keeps me in this space. I guess the change and the pace of things. And for us, as a crypto company, you know, we like to see ourselves more of, I guess, a Web3 company. And just, again, blending that centralized, decentralized mix together. And so people are continually interacting in this ecosystem without actually knowing exactly what is behind the scenes they're working with. That's sort of, yeah, where we're going.
Great. Eric?
Yeah, I'm actually very similar to Jamie. Being a founder and builder as myself, seeing what the next thing is to support the next wave of Web3 and digital assets to support everyday people, more specifically around tokenized reward assets as well. How do we fractionalize a lot of things that are reserved for, you know, certain individuals, and being able to break that down for everyday people to then be able to access? That's what really excites me.
Yeah, fantastic. Well, I'm excited to be here and thank you all for your time and your patience. Hopefully you got as much out of our panel and discussion as we did. I just want to thank the panel. Thank you, everybody. And thank you for being in the audience and thank you for coming to Wholesale Investor.
Thank you to our amazing panelists for that interesting discussion. And now let's move on to our next company showcase. Please join me in welcoming Yash Varma, founder and general partner at Empress Capital.
Thanks so much, everyone. I'd like to start off by thanking Steve and the whole Wholesale Investor crew here today for putting on such a great event. Now, I started talking with Steve probably about almost 2 years ago, and I talked about AI and launching an AI fund. And I remember him questioning why AI and why start an AI fund. As we've seen already today, AI is really changing the way we operate in so many different levels. And so, let me just see this clicker works. I'm the general partner and founder at Empress Capital. At Empress Capital, we focus on investing in early stage AI companies. And we really believe we are at the beginning of a really interesting part of the world. We're seeing everything changing, and we believe this is a once in a generation opportunity to invest and really change almost every industry. And we're starting to see that play out. And we believe investing in early stage companies is really where the opportunities are at. And we really believe that, particularly in Australia, there's some great opportunities. And I'm going to come on to some really interesting portfolio companies that we're investing in. So we want to back founders early who are really responsible founders, developing solutions and really great, profitable organizations in this space. And so I probably don't need to tell you why, but this industry is growing so quickly. We see our research shows that this is growing at over 40% a year. And we see this continuing on in this next 5 to 8 years as being a really critical point for growth. And we feel this is this once in a generation opportunity, and investing early, like I say, is a great point. Now, I just wanted to point out one thing as well. There's a little QR code on the corner of the screen here throughout the presentation. We've got a lot more detail about both our portfolio companies and some of our thesis. I'd love if you're interested further, just scan that QR code and you can get more details about what we're doing. But look, I think this is a once in a generation opportunity. And the challenge with this is, as I'm hearing in the room already today, there's a lot of hype, there's a lot of AI washing, and that's a challenge for each of you as investors in the room, that whilst everyone can see this, I often hear people say, but this is hard, it's too crowded, I don't get it. And that's what we love, and we believe that's one of our advantages. We've got a team of people, I'm going to come on to our team, of both who've run businesses, founded businesses, exited, but also deep technical expertise. And so prior to founding Empress Capital, I had a software business for 20 years, a global software business, studied AI at Stanford. We have people within our team who have deep expertise, and I'll come on to that in a second. But look, we feel there's three major problems about investing in AI, and we believe we have solutions for that. And it's technical, it's complicated. We see that it's changing very quickly, and so keeping on top of that can be challenging, and that's where we focus. I mentioned we have a team that has deep technical expertise, and so we're always keeping on top of that is something that we're constantly tracking. And I think to be able to invest in this space, one, looking at the past, so I reflect a lot of my first business, which was the early days of the internet, feels a lot like that right now, where we can learn, but equally looking at how things are changing. And every week in AI is like another month in another industry. Every month is like a year, as you probably have seen. It's also very volatile. We see things going up and down. And so I think like I say, we're constantly looking and learning. We're talking a lot about what's going on, and I'll cover off a little bit about some of the events and the things that we're doing around this. But equally, we believe early is important. So being able to help companies at that early stage for growth is where we really feel we have strength. And I'll cover on about what that is. And so when I say AI, what do I mean by AI? I mean, we focus on 3 buckets. So the first of those buckets is around applications. So applications using AI to really get a competitive advantage. And we see that as being really the early days of that. And some would argue there's many toy apps right now out there, but we see this developing and quite rapidly within the next 5 to 7 years, some really significant game-changing apps. And one thing I'd love to just highlight about this as well is right now we're finding a lot of things are being automated or streamlining the existing models. But the future where we see the investment opportunities is whole new business models are going to come out. So the second area we focus on is AI tools. So tools being used to develop solutions in this space, so to support the solutions. And the third part is infrastructure, and I'll cover what that means. We believe there's a whole tech stack that's being built out, which is more than just compute. So look, we've got a great team. Alongside myself, we also have in our advisory board, we've got people like David Baxby, who's worked with Richard Branson, Prabhat Sethi, who's worked with the Murdoch family, as well as really deep in the prop tech space, and you'll see some of our investments to date. We've also got Draw, who's also an AI, PhD AI, founded an AI business, exited that business as well, and we've got Darren Heathcote, who's in the room as well, who's a real deep healthcare expert, investor, entrepreneur in that space for many years, and we believe that combination of both deep tech and investment experience is what gives us the advantage. And also Tim Baker, who's our trustee, to make sure we do all the right things. So look, the more interesting part I'd love to cover off quickly is just around our portfolio. And we've made 8 investments to date. And one of the key traits about our investments are investing early in Australia to go global. And every one of our portfolio companies is doing that. And so I'll quickly run through just a few of those given the time. We have Quintessence Labs. They're within our infrastructure bucket. Quantum encryption, we believe that's going to be a big part of the tech stack. Archistar, Prop Tech of the Year last year, going global, designing and building properties within planning permission. We also have Tability, what we like to say a Fitbit for work, OKRs, 2 ex-Atlassian founders. Anthropic is one of our only investments which is not in Australia, but we also believe that they will have one of those larger language models that will be around in the future, and hence we've made a little bet on them in here. We also have Buzzy, a no-code platform, and I really recommend you do have a look at seeing this. When you see Buzzy, you go from an idea to a working Android and mobile app in minutes. We also have Particular Audience, which is a AI-based e-commerce platform. They're really pushing out in the US, featured in some really great research around some of the leading plays and what's going on there. We also have Airseed. Airseed's an amazing company that can really use their computer vision models with deep seed pods that they have patented to really to plant up to 40,000 trees a day, and they're building a software product driven by AI and carbon, and really amazing what they're doing. And our latest investment is Mary Technology, which is a legal AI company doing some really great work in a niche area around chronologies. And that's what we start to see is there's high value tasks is what we look for, real niches. And when we start to see that, we see there's real adoption of some of these technologies. Now, I'm going to have to really rush. Look, we believe that we're more than just a VC. It's how we add value, and we add value in many different ways, ranging from business development to help hiring, to also bringing alongside co-investment and investors. I also have a high-performance coaching background, and we love to bring that into the fray to really help our founders to really succeed. So the fund, in summary, really, we're raising a $20 million fund. We're about halfway there right now. Our target returns are around the 5x mark, so that's what we're targeting. We believe we can really achieve that based on the growth that we see in the industry. Minimum investments, 100K within the fund. We have a 2 and 20 model in terms of fees, 10-year fund. I'd love to talk to you more about this, but one of the big things we want to do is build community and support those early stage founders. So even if you don't invest with us, we'd love you to come to events, support some of the great companies that are coming out of Australia, and we believe that's where the future is in terms of investment and opportunities here. So yeah, we'd love you to do that. Equally for family offices and other investors, we really support co-investment in many of the companies that we invest in. So if that's something of interest to you, we do work with many family offices on that. And I'd love to just finish off by saying, look, we're named after the Empress tree, which is this purple tree. It's one of the fastest growing trees in the world, grows to harvest within 10 years. And the Japanese think of this tree as bringing good fortune and good luck. So we like to think of ourselves as being based around that. But thank you so much.
Thank you, Yash. And now please join me in welcoming Richard Owens, founder and CEO of With Wine.
Good afternoon. Got the right slides up? All right. Because our business has the word wine in it, I would forgive you for jumping to the conclusion that we are yet another online wine business selling wine on a website, competing with millions of others doing the same thing, holding inventory, earning tiny margins, and that I'm up here asking you to fund my astronomical customer acquisition costs. So I'm pleased to say that With Wine is not another online wine business. We sell software. Oh, hang on, my clicker's not working. Now it is. There we go. I've got to push a bit harder. We sell software. We have very few competitors. We don't hold any inventory. We have very healthy and stable recurring revenues that earn high and highly scalable margins, and our customer acquisition costs can be kept to an absolute minimum. We are like these guys who are the kings of their chosen vertical. The only difference between their verticals and wine is that the wine vertical is bigger. And no tech company has cracked it yet. And make no mistake, the largest wine company in the world is going to be a tech company. So how do we become that company? This triangle represents the wine buying population. There we go. The bulk of them are buying their wine via middlemen resellers such as retail stores and restaurants. And in the top 4% of the triangle there are those who buy direct from wineries. Now, there's a funny thing about the people who buy from wineries, and that's that they influence the people who don't. So to prove my point, I'll tell a quick story from 10 years ago when my wife and I went to a Gowings bar with her friends and their husbands. As we sat down, the waiter came over, gave one of the husbands the wine list, and he promptly gave it to me. And I said, no, don't give me the wine list. I'm not the wine guy. And he said, mate, you're more of a wine guy than we are. You go to celladors and wine festivals and all that stuff. So, has anyone heard the saying, in the land of the blind, the one-eyed man is king? Basically, I had very little knowledge, but it was more knowledge than everyone else at the table had, so they put me in charge of all the wines they drank that night. So if you want to dominate a market, you have to know who all the one-eyed men and women are, and when it comes to wine, they're all the people at the tip of the triangle that buy direct from wineries. So we thought, what if we could build a system to power those transactions and capture data on all those people? So we did. Sorry, this clicker's not working very well. There we go. So step one of becoming the largest wine company in the world is to embed ourselves in the winery's existing direct-to-consumer business with a commerce platform that powers every sale and every payment that goes through their cellar door, their website, and their wine club. It's also their CRM, recording who's visiting which wineries, what wines they're tasting, which wines they're buying, and what emails they're opening and engaging with, what words were in the emails that converted versus the ones that didn't. And all of this data is getting recorded to a With Wine account. So when you log into Lewin Estates' website, you're registering and logging in with a With Wine account rather than a Lewin account. And when you're logged into Lewin, you're logged into every other winery's website that uses With Wine as well. We are the only ones on the market that has this, and it's an incredible competitive advantage. The way you become the biggest wine company in the world is to have more data and better data than anyone else. Because one day soon, that data is going to be used to train an AI that's going to know who to re-engage about what wine, at what time, at what price, and with what words. So we've been amassing this data since 2018 from 1.3 million orders worth more than $200 million against 583,000 customer email addresses, of which 89,000 have verified With Wine user accounts with a credit card on file. We haven't started monetizing this data yet, I'll get to that shortly, but we have been earning monthly fees and payment processing fees to the tune of $1.7 million from more than 130 paying winery clients in FY24. That include the world's largest listed wine company, Australia's largest liquor group, which owns wineries, one of the largest wine groups in the US, and many of Australia's most famous wineries, including people like Grosset, people like Lewin Estate, and Peterson's. So step one is built in use and mature, and in FY24, after taking out some abnormal expenditures, it produced a small profit. Now that's good. That's a good business in itself. It earns reliable recurring revenue, which is why our biggest competitor got bought by private equity 2 years ago. It's highly defensible because it's very specialised, it has very few competitors, and we have a massive competitive advantage against any new ones that may come along. So step two to becoming the largest wine company in the world. We need to earn high-value, high-margin commission revenue by being a customer-facing brand, and we're not going to earn much of it if the millennials and Gen Xers are being asked to fill in paper order forms and visit multiple websites. So we thought, where's the app for wine tastings? Where is the app for wineries in general? Why do I have to maintain my multiple memberships for multiple wineries across multiple websites? How come no one's done this before? So, to solve this problem, we built the With Wine app. This side of our business is literally just getting started. The app is built, you can download it from the app stores, you can buy wine on it today, and please do. We've got a couple thousand app users, and so far it's been earning us an average of 6% commission from a very low base, but without us spending a single dollar on marketing and promotion, and that's because the wineries are doing the marketing and the promotion for us. So just on Friday, last week, I was sent this photo by one of our clients who got this aluminium sign printed up and bolted to the front door of their cellar door without us asking them to. So in a few weeks, we'll be adding promotional banners on the 3 million emails our clients send out every year via the With Wine platform, and we're doing this because they've asked us to. So steps 1 and 2 are fully built, live and generating revenue. And as you can see, we're not B2B, we're not B2C, we're actually B2B2C, playing both sides of the transaction and using each side of the business to feed and grow the other. So step 3 isn't built yet, but it will be by the end of 2024, and that's giving everyone with the app the ability to monetize their influence, i.e. building referral and affiliate sharing capabilities into the app. Even though it hasn't been built yet, we have already lined up some influencers for when it's ready to go, including Amy Gerard and Merrick Watts. So hopefully you can see where all this is going. The wineries are using With Wine to run their entire business. That software is collecting data on all the market influencers in the vertical. The wineries are promoting the With Wine app to those influencers, and when they get the app, those influencers are going to be driving referral and affiliate sales to the people in the mass market, turning them into new direct-to-consumer customers for the wineries and earning us 25% in the process. At some point in the near future, there will be a 4th step, which is to apply a layer of AI, which will autonomously re-engage with the customers on behalf of the wineries and enable us to earn those big licks of commission on autopilot. Over the next 2 to 3 years, our goal is to get our revenues beyond the $5 million mark, which we believe is the minimum required before being able to give investors liquidity via an IPO. To fund this growth, we're planning to do a $2.5 million round in the second half of FY25. But before doing that, we want to validate our ability to earn the commission revenue because that's what's going to have the biggest impact on how we price that $2.5 million round. So to that end, today we're raising a small $500K bridging round at a valuation set at a modest 4 times multiple of forward revenue. This is to fund us for approximately 6 months, after which we'll expect to raise at a much higher valuation, giving investors a nice uplift. In terms of who you are entrusting your money with, your board consists of myself, and my background's with Macquarie Bank, Apple and Rothschild Bank, Jonathan Salmon, who built and sold one of Australia's largest IT services businesses, Murray McInnes, who is the second longest serving shareholder of Brokenwood Wines. As an independent advisor, we've got Andrew Kayard, who is Australia's most celebrated master of wine, a co-founder of Langton's, a Legend of the Vine Award winner, and author of the award-winning Australian art book that chronicles the history of wine in Australia. Heading up the tech team, we have our CTO, Steve Panetta, who used to be one of the top developers at domain.com.au, and for sales and relationship management with the wineries, we have Scott McWilliam from the McWilliams wine family. Our share register includes the owners of multiple wineries around Australia and an array of highly respected Australian tech investors. And that's it from me. I've got handouts I can provide for you outside, and I'm looking forward to you joining me as we build the world's largest wine company. Thank you.
Thank you, Richard. And now let's move on to Zeo Sustainable Materials. Please join me in welcoming its co-founder and CEO, Alf Wheeler.
Good afternoon. Can you hear me okay? This is Zeoform. It's made from recovered paper and water and nothing else. I won't read the disclaimer. I'm sure you've all seen enough of those before. There's a surging demand for eco-materials, which is unprecedented. As the demand for surging materials surges, the world's largest manufacturers and brands actively seek eco-friendly solutions to maintain their market leadership and regulatory compliance. Unfortunately, most of what's available out there for these manufacturers is greenwash. It's a material marketed as sustainable, full of resins and plastics and other materials that don't break down. This presents an unparalleled opportunity for a truly sustainable, commercially viable and scalable material. That's why I've invested everything I own, millions of dollars, and nearly 2 decades developing Zeo's solution. Mountains of useful materials are stuffed into landfills daily. Brands and manufacturers are hungry for solution. The European digital passports are coming, requiring all manufacturers to offer full traceability and transparency on their raw material supply chains. Governments are legislating. The world has finite resources and the demand for them is growing. Toxic waste is everywhere. People want alternatives, and the UN SDGs are driving change for 2030. Our solution is a process that turns plant waste into valuable consumer products. It's an innovative micropulp which provides a scalable, cost-effective alternative to traditional materials, with applications ranging from everyday goods to industrial uses. It's backed by extensive development. Zeoform is ready for significant growth. It's a solution so perfect, we literally wrote the book on it. Join us in enabling sustainable manufacturing with Zeoform. I was just showing some pictures here of some waste paper, some hemp fibre, and then some Zeoform micropulp. I said earlier we use waste paper as our feedstock. It's any form of cellulose waste. So these are plant-based waste streams. It can come from sugarcane bagasse, hemp fibres, old jeans, cotton waste, sisal, jute. If it's plant-based, it contains cellulose, and we can use it as a feedstock for Zeoform. Now, we make Zeoform without any toxic ingredients whatsoever. We mill plant fibre and water together. It creates a product stronger than steel that conversely is biodegradable at end of life. It can replace wood and other materials in dwindling supply, leveraging existing agricultural waste streams globally to ensure a continuous and growing supply. By that, I mean if we plug into a source of waste paper to make our Zeoform micropulp and the waste paper becomes unsustainable, we can switch to rice husk or we can switch to cotton waste and we'll still get the same outcomes. So the world's biggest brands want to make stuff with Zeo. We get inquiries daily from companies like Chanel, Google. They're all looking for alternatives that are truly sustainable, and they're all beating a path to Zeo's door. It seems a little bit too good to be true that this stuff here, which is so strong and durable and mouldable, can be made with just fibre and water. But it's true, there's no petrol in here, no glues, no resins, no binders. We don't add any formaldehyde or other toxic ingredients. We just take cellulose fibre and water and engineer our amazing material. I said it a moment ago, and I'm going to say it again, cellulose is found everywhere. There's millions of tons of it all over the planet going to waste. It's been stuffed into landfill and burned as we speak. It's in waste paper, it's in old farming waste, food residue, it's everywhere. And you can make almost anything with it. So Zeoform's potential applications are vast. They're spanning everyday products such as furniture, lighting, homewares, sporting goods, and musical instruments. It's perfect for toys, adventuring, travel goods, gadgets, containers, tools, and more. Future possibilities include housing, automotive, and eventually aerospace. ZMP offers a sustainable alternative without compromising on performance or quality. Imagine investing in a technology so cool and universal in its application that one day people everywhere will be making everything with it. The global furniture market is just one of the markets that we're targeting and having success. It's currently valued at $548 billion a year and projected to grow to $780 billion. Just to give you a scale of the opportunity, this is just one market that we're servicing amongst many. It's a fully biodegradable material. Unlike other products made from ZOP can be harmlessly decomposed at the end of their life. Nothing toxic is added to our material, so nothing toxic leaches out, which is how we give a no greenwash guarantee. Zeoforms are made from plant waste and water. If they ever end up in landfill, or heaven forbid, nature, they're going to break down harmlessly and leave no toxins behind. This is a multi-billion-dollar opportunity. Right now, we're raising $10 million for critical infrastructure upgrades and to recruit some additional staff. Next year, we will be seeking $100 million plus to build a state-of-the-art factory in Europe producing furniture. This facility is projected to generate $1 billion a year in annual sales, with plans for expansion into the UAE, Asia Pacific, India, and eventually the whole world. We're confident in reaching 10 billion in global annual sales within 7 to 10 years, with an optimistic outlook exceeding 100 billion. Our mission at Zeo is to revolutionize global supply chains by producing everyday goods from plant-based material and repurposed waste, promoting sustainability and eco-friendly consumption worldwide. The global demand for sustainable solutions is surging, and Zeo has developed the missing link. All the major brands are beating a path to Zeo's door. Do you want to help us to help them? This is our team. Oh gosh, I'm at 21 seconds left already. I've got to go really fast. I'm going to just skip through the team. You get a chance to check on them later. Thank you, everyone. Appreciate your time, and thank you for putting on the event.
Thank you, Alf. Now, wrapping up our final set of company showcases is a pre-recorded presentation from Mine to be presented by its founder, Karim Chowman. Let's watch this.
Hello, everyone. My name is Karim Chowman, and I'm the founder and CEO of Mine, and I'm thrilled to take you through the deck today. The idea of Mine started when myself and an old friend asked ourselves a question: what's your current net worth? Well, we couldn't answer it. We had a lot of moving pieces, and we were scattered among many different types of assets. And we couldn't find one single platform that allowed us to aggregate all types of assets, banking and non-banking, in one dashboard that is user-friendly and also in real time. The second question was, have we protected our assets? And in reality, what led us to that was, unfortunately, a loss of a close friend, which left his wife in huge financial stress, trying to understand and figure out what they owned, and which added a lot of financial stress to her grief. And this is the sad reality of many loved ones that are left in such circumstance when such events happen. With these two issues in mind, and the continuous evolution in the fintech space, from the very high fintech spending and app installs to the need of the elevated customer experiences with open banking and digital wallets, led us to create Mine. And we present Mine as a subsequent new opportunities, because the likes of these investment platforms and fintech apps, when they grow, we grow. The more you have and the more connected you are, the more you need something that consolidates everything in one place. Mine has two key verticals: Mine Personal, which helps users track and grow and protect their assets in one single platform, as well as Mine Business, which is the B2B SaaS go-to software for financial advisors and wealth managers. Mine Personal has 4 wealth management tools. Net worth, we connect with open banking to fetch bank account data regionally, globally. You can connect your stocks and cryptocurrency wallets, among many other assets. And the features that are prominent are asset aggregation. You have a live view of your net worth, as well as a smart dashboard that allows you to see your asset allocation by country, by type, diversification score. And we added 2 features, which is asset insurance and asset valuation, to help you really own your financial house and data. With budgeting, since you already connected your bank accounts, you have a live view of your spends. With a matching algorithm, all your spends are categorized. You can create goals and see patterns here to become better at spending and saving, and later to invest in a smarter way. Now, with estate planning, we consider this one of the most important also verticals in Mine Personal, because in this region, we don't have tax implications and people don't plan for the future in the right way. And unfortunately, they think about it when it's already too late. Within Mine, we help you clean your financial house, whether it's life insurance, trusts, foundations, wills to protect your assets. You can do it all in one platform that is user-friendly. How it works, based on your asset profile, you're matched with an estate planner. You engage with them on the application on a video and chat feature. You get a curated estate plan. You accept and pay on the app, and you get status updates of what has been completed. And in the end, you're notified when the service is done. So this is Mind Personal. When it comes to Mind Business, we want to be also the platform of the future that enabled family offices to really benefit from all the learnings we had from old softwares, but also deliver a great solution. The aim here is to be the leading B2B SaaS software. We have strong experts that are joining us from leading wealth tech software companies, and we have a strong value proposition with advanced features that would allow us to be very competitive in the market. This is how the application looks from Mind Business, and we are continuously evolving. We are also embracing AI. We will definitely focus on the right AI engines with the right data input to produce the right output, whether it's real-time suggestions to increase saving, best age to retire, financial health score. We will have it all within Mind. We have 4 revenue streams in mind. In phase 1, it's $100 subscription to access annually to access all the verticals. We have 20 to 30% revenue share on all estate planning services, and we have referral fees when it comes to insurance and as well policy revenue share. Now, Mind Business will be a SaaS software, rebrandable as well, and the way companies pay is yearly subscription or based on how many licenses we offer. When it comes to our TAM, our primary markets now is UAE and KSA. And within Mind Personal and Mind Business, we have a strong TAM, and we believe we can target a big portion of it. When it comes to acquisition, we have a comprehensive acquisition plan. When it comes to Mind Personal, we don't want to just focus on acquiring one customer at a time, but herd acquisition. And here, Mind has been positioned as a employee benefits idea within corporates. We presented already 2 companies, and Mind will become one of the enablers that help them with their financial well-being. These 2 companies will subsidize $30 out of the $100, and we will continue targeting a lot of companies to acquire customers at large, on top of the normal B2C channels that we have. We had a soft launch of Mind in the Dubai FinTech Summit. We received great feedback from customers, which validated our proposition and propelled us to go further with launching Mind. Now, this just to show that we're also thinking about the future with real-world asset tokenization, while others will be building trust, would have already earned it since you have all your assets. Mind as your financial digital passport, you have your financial health score that would allow you to access financial marketplaces, or we will create our own marketplace. Mind in numbers, we believe that this business is a viable business. By the 3rd year, we'll be making a substantial profit, and we are aiming to launch in different markets in 2025, like KSA. We are raising 750 to 1 million. We've raised already 200,000, and this is to help us take this plane off, hire a primary team, continuing the development and launching Mind. Mind is aimed to launch in GITEX, which is happening in October. There is a specific event called the FinTech Surge. We will be exhibiting, and I will be speaking about Mind in a presentation. We also have a strong team that is being now built. There is Dia, that is the CTO of Flowered previously, which is going IPO, and we are hiring a strong CPO, which is a product expert. We have also a good advisory team specialized in estate planning and financial services, and we're partnering as well with a very strong law firm in the region that is also Arabic and an English service provider, as well as a strong advisory team. I'm very happy to take questions. You can scan this barcode and you can get in touch. Looking forward to hearing your feedback and engaging with the potential investors. Thank you.
Thank you, Michael, for that insightful keynote. And now please join me in witnessing our last panel of the day, who will be taking us through the emerging digital asset trends. Please join me in welcoming our moderator, Ali Su, co-founder at Transhuman Coin. And I'd also like to call on our panelists, Ben Simpson, CEO and founder at Collective Shift, Joseph Beverly, value engineer at Singularity Net, and Ryan Johnson Hunt, co-founder and CEO at DSG.
Hello, they say they save the best for last. So welcome to the best and the last panel today. Today we're talking about emerging digital asset trends. And we're going to be focusing on three main topics today. The first is tokenization, second is decentralized AI, and everybody's favorite, which is a mouthful, decentralized physical infrastructure network, or DPIN for short. So let's get into it. And before that, I'd really like Ben to set the scene for us about what has been happening in the landscape and the market for a while. So given that you run the crypto research firm, Collective Shift, can you give us an outline of what's the investor sentiment towards digital assets in the last 6 months? And can you, if it's possible, highlight what are the three key things that have occurred that have led us to where we are today?
Okay. A sentiment the last probably 6 months has been pretty flat. I mean, Bitcoin, the whole crypto market has sort of been chopping sideways for the last 6 months. But ultimately what we've seen is we've seen a large number of new technological advancements, I guess, behind the scenes that, quote unquote, aren't very sexy, but these guys are very smart in their own field, speaking about, DPIN, AI, security tokens. They're probably not the most exciting things to talk about, but there's the technology that's actually being built is really exciting. And, retail investors haven't really caught on to that at the moment, but institutional investors have. So, from the Bitcoin ETF, the Ethereum ETF, especially out of the US, BlackRock, one of the largest institutional funds in the world, have launched a $500 million tokenized fund on Ethereum. These are tokens and blockchain-based tokens where people can buy in and we're investing, on-chain, which is really exciting. So the market is continuing to grow. Bitcoin's compounding at 60% year over year. The altcoins haven't ran too much, but there's some really exciting stuff that I think we'll speak about today that, there's a lot to be excited about.
Now that Ben has set the scene for us, I want to take a moment to reintroduce our panel very briefly, just so that you'll understand that we have very different perspectives and voices on the panel today. So first we have Ben, who is from Collective Shift, and what he offers is crypto research and education. And then we have Ryan, who works in securitized tokens, and we have David, who works in the digital asset firm Digital X. They are ASX listed, and they do many great things in the digital asset space, including tokenization, which we'll talk about. And we also have Joseph Beverly from Singularity Net. He works in the Center of Decentralized AI. And as for myself, I run Transhuman Coin. We are a project that supports other science and tech projects to help overcome limitations of human biology. So we were recently filming in Hollywood for Killer Whales show. It's the Shark Tank for crypto. So catch us on Amazon Prime or Apple TV when it comes out at the end of the year. All right, so now that Ben has laid out the lay of the land, I do want David to go through what Digital X is doing, especially in launching your own ETF. I want to understand and give the audience a perspective on what is the potential impact on the space with the recent Bitcoin and Ethereum ETF approvals.
Sure, thanks Elise for that. So yeah, DigitalX is an issuer of a Bitcoin ETF on the ASX in Australia. Realistically, the first of its kind in Australia. I think in terms of the overall impact that ETFs are having or have had, obviously there was an important US approval earlier in this year. My sort of view is that the impact of that is probably greater than the original, the AUM or the flows that these funds have attracted. The effect is probably greater than that in terms of the overall footprint. Earlier in the year, groups like Fidelity are now recommending as part of a strategic asset allocation, a sort of global, a smaller allocation to Bitcoin, coming from that, improving portfolio return, improving Sharpe ratios within something like a 60-40 bond equities portfolio. So that's definitely a big change between where we were 5 years ago and where we are now. In terms of like what's to come or like what else is the potential impact, I think there are pretty big institutional pools of capital that haven't necessarily been addressed. A good example of that is probably corporate treasuries in the US and Australia. So FASB did some industry consultation when considering a rule change in relation to the tax treatment of Bitcoin specifically. And in that industry consultation, all of the respondents that they spoke to, these are large listed US companies, came back in favour of a decision, yes, we want you to change the accounting treatment of Bitcoin from an intangible asset to something that we can mark at fair value every month on our balance sheet. So at least tacitly, that sort of seems to imply a level of receptiveness to Bitcoin from that asset allocation vantage point, and the effects of that we'll hope to see in future. A similar story may be playing out in Australia. Like, a lot of dealer groups here are receptive to the concept of advising on digital assets within their client portfolios, and yet we're still very early in the education journey and bringing advisors up to speed. Like, in Australia, we haven't had these listed products for very long. So that's kind of the next step in Australia, and we're excited to be a part of that at DigitalX.
Up to this point, we've heard about what has happened up to now in digital asset space. And from now, we're going to look forward to the future. What are the trends that are driving investment in this space? So the first theme we're going to talk about is tokenization. So tokenization, specifically of real-world assets or securities, is said to be the next big thing. I have been working in this space since 2017, and there have been many companies who've attempted to tokenize real estate specifically. So what is tokenization? It is the process of converting rights to an asset into a digital token on a blockchain. So you can buy it, sell it, trade it. Now, when it comes to real world assets, we're talking about property, we're talking about stock. So to the panelists, where are we headed in terms of tokenization? And can you provide examples of any industries or companies that are doing it well?
What a controversial topic. I think we even debated when we had our meeting together as a team last week. We were like, we had all these terms and we're like, okay, this is great, this makes sense. And then we're like, hey, this is all just tokenization. The reality is tokenization is making something that is more available in a smart contract form, which doesn't really sound that sexy, but when you think about the benefits of blockchain being around T+0, having smooth transactions and ability to have public transparency, it really does get really cool, if you're into reporting, of course. But on tokenization, anything is more liquid and flexible if it is in a smart contract form. The way we can automate payments, right? Even looking at the examples of Aave and MakerDAO, they're essentially lending institutions, right? They're taking deposits, they're lending out currencies with a yield for either side and it's rate. And it's all algorithmic. There's not 20,000 developers working there. It's a very lean team. So if they're able to do this at scale with billions and billions and billions of dollars under management or within liquidity, why can't we be doing this in the world? And so it comes down to getting everything into the same communication format, smart contracts, et cetera.
Yeah, I think one of the things that can make tokenization in real-world assets so confusing for market participants is a pretty broad category that covers a lot of things. So if we think about the spectrum all the way from how this value is represented, if it's a permissionless token that anyone can buy, there's quite a bit of counterparty risk in making sure that the token is locked to the underlying collateral, and that's where things have gone off the rails. All the way through to the other end of the spectrum where they are regulated financial offerings issued as digital securities and recognized by that jurisdiction as a share or a bond, and it just happens to run on blockchain rails. So there's a full spectrum of real world assets, and I think that's where people can run into trouble when they kind of all get bundled into one.
It's also one thing really quickly as well. It's not just financial, it's also data, right? The future we have before us is that we're moving from this idea of everything is really siloed, it's paper-based, but we live in a very binary digital world. So why is it that there's so much data that is just can't be unlocked, right? It's so secure, it's siloed, it's away from us. But tokenization doesn't just mean kind of putting more money in a better communication layer. It actually means having better data available, right? It could be reputation data, credentials, attestations, right? It could just be proofs. Maybe you don't want to do the transaction of your selling a house on chain, but maybe you want to have the proof there, right? Because that's harder to lose or easier to lose depending on kind of what can become from what technology you use. So data being tokenized is probably the biggest benefit. Making money move faster is great. We love efficiencies, but whole new economies being created when you have easily accessible, queryable data that can have select disclosures, privacy preservation over it. And that's really the main boom. And we've yet to see that because you don't really make much money in non-transferable attestations, right? That don't have any monetary value to it. So it does take a bit more of a push, and people to be more socially minded as well to test these things out. We're seeing with more institutions. So
sorry, and sorry if you want to move on, feel free to cut in. But just to give an example as well, at DigitalX, so we have a tokenized property fund, and happy to talk about the strategy at drinks after. I know we don't have too much time left, but one of the things that we proactively did was reflect the NAV and the unit register on chain. So it's reflected on the actual blockchain itself. And I think like an obvious one for a lot of people that have been in this space in the financial services sector is the coupling of unit issuance with settlement. So the technological advantage of blockchains is that you can do that. You can receive consideration for issuance of unit capital at the same time as issuance. So that's potentially something that, again, it's probably going to depend on whether groups like Atomic and Apex and these large unit registries are going to want to play ball, and there has to be a really real business case for them to do it because there are a lot of network effects that they need to generate in terms of having all of these people, using digital assets as part of that settlement process. So there's a lot that is yet to be done in industry, but of course the technology itself is absolutely capable of facilitating these sorts of ideas.
Ben, you want to add?
No, I think we covered it pretty well.
And Joseph wants to remind me to say none of this is financial advice.
we have no lawyers on the panel, so which made it very clear. It's not financial advice, tax advice, legal advice. Any advice.
Now, I don't know if any of you actually mentioned the actual company that you think is doing well in tokenization.
Well, that's the thing. Tokenization is smart contracts, right? So we can look at tokenizing value itself with Aave and other decentralized products and solutions. You could look at, tokenizing computation services with Nasana, which is an amazing startup using distributed computation device as services. Helium using for, I gotta make sure I get this correct. It was radio waves, and there's one for Bluetooth. So really, we're like, think about data as just a basic side by itself, and hold it up in front of yourself and think, wow, how can I get this to transact and communicate with things better without me actually having to be involved in that? Obviously, we're not the AI conversation yet, but that's really when you get more exciting use out of blockchain. You have everything on the same communication layer, and then you have AI as an intelligence layer that's able to communicate, transfer information, and equally co-develop plurally with all these different technologies, services, and intelligences. So yeah, that's what I kind of add as well.
Ryan, Ben, did you want to add something?
I was just going to say that there's a company that was founded in Sydney called Maple Finance, and they're sort of on the edge of tokenization of real world assets. It's a company, transparency, I'm an investor in, but just the ability, I think tokenization in the day, very simply, is just a way you can buy, real world assets, for example, on chain where there's full transparency, instant liquidity, T0. If you have assets locked up in the stock market, for example, or you want to go and, sell some gold on Sunday, right? It's going to take you 3 days to move it, and the banks will shut down and ask you all the reasons why. Tokenization, removes all of that, removes the middleman layer. You can see Maple Finance, for example. You can see exactly how much value is locked on chain. You can see what they're doing with the money. Token holders that own the Maple token actually get the interest of the fees generated from people buying and selling, and it cuts out the middleman. So tokenization, I believe, is going to be the future for a lot of assets in the future, because it's just easier, and consumers will find easier and better products.
And Ryan, your company DSG does tokenization. Can you explain your approach or how your clients are approaching it?
Yeah, sure. So at the fully kind of regulated end of that spectrum, we're a platform that allows issuers to, sell equity or debt to raise capital. And then we also connect them with investors that want to invest in that and have a secondary market for that as well. So that very simple connective tissue actually unlocks quite a bit for quite a few market participants. Of course, there's the SME kind of equity that we often talk about, but even things like even something like gold, what Ben said, being able to bridge that on chain means that you can unlock this 24/7 trading, collateralized loans, all types of things you can build in with permission DeFi products once you get them on chain. So that's a really big kind of passion area for ours. Being able to issue securities and have them on chain, at a very high level, it allows access to previous participants that were priced out or inaccessible. But really, it's about unlocking what you can do once that's on chain, how fast it moves, what kind of stacks you can build on top of that. And, traditional finance does lots of things really well, but it does get criticized for intermediaries and opacity. And you don't have to look back very far to remember times when, when there were too many layers of opacity between the holder and the collateral, things get messy. And one of the benefits of blockchain is you can provide that transparency.
Now, I want to switch to AI. In the last 24 months, AI has gone advanced very quickly. So many advancements have been made by OpenAI, Anthropic, Mistral, many others, and also by the hyperscalers such as Google, who you just heard from, Meta, and all the big tech companies. So this has led many to question whether it is safe to allow so much powerful AI to be concentrated in the hands of few. So the decentralization, or the idea of decentralization of AI being the path forward, has gained momentum, I should say. So in your opinion, is decentralized AI where we should put our money, and what needs to happen to make decentralized AI work? Ben, I want to start with you.
I don't claim to be an AI expert at all. All I know is that blockchain is hard enough, and people building on blockchain is extremely difficult. AI is probably just as hard, if not harder. And then to bring the two together is extremely hard from a vision perspective. There's some amazing projects with big visions in the AI space. I haven't seen anyone really be able to deliver. From an investment standpoint, though, it is a very sexy narrative that investors love. Crypto and AI, people will jump on, and we've seen some really good returns in that space, in that sector. But from a fundamental level, I haven't really seen any of a crypto AI product really come together, to actually achieve something that the vision. I think it's a long way down the track. But I'm sure these guys can talk a little bit more about the tech. Joey, I'm looking at you.
Yeah, sorry, and I don't want to wax philosophical here, but you opened the door for us. I think so. Peter Thiel wrote the forward to a book called The Sovereign Individual, which he sort of framed this this kind of contradiction between like AI on the one hand becoming very powerful, able to govern the allocation of resources within an economy, as being fundamentally kind of antithetical to something like Bitcoin, which is ostensibly about the protection of free market mechanisms. And so I don't want to be too sympathetic towards conflating the two, because at least at a conceptual level, they seem kind of transposed in some way. The existence of extremely powerful AI is something that I think technology leaders are worrying about. I can't necessarily add any value to that discussion, but I view it as a relief to see that there is a fair amount of investment capital flooding into the cryptography space, because if there aren't people paying for people to solve hard cryptographic problems, then potentially we're seeing the growth rate in the availability of compute, as well as the kind of the functionality of that compute in AI sort of outpacing the growth rate of the strength of our cryptography methods and protocols themselves. A lot of people are worried in crypto about AI and quantum computers breaking the SHA-256 encryption standard, which would be catastrophic for crypto and probably the rest of the world, given how reliant different defense and other security systems are relying on that standard. So I don't want to sort of conflate the two, because I think in some sense there is a battle between them. So I don't know, maybe that adds value to the question.
I'll go next because I don't want to go last, because Joseph knows the best. I don't want to go after him. What I think blockchain brings to solve AI problems is blockchain enforces digital scarcity in a world where you can copy and paste, or these days you can deep fake, and it's very hard to know the provenance of who has created content. Blockchain did that for digital value. It enforced digital scarcity. You can't copy and paste a Bitcoin. And so there's room, I think, to bring real solutions to AI, potential generative AI kind of misinformation problems that are only going to get worse, especially coming up with elections and things like that. So I can see blockchain solving some of those problems. But I haven't seen any projects that really excite me, but I can see the potential.
Jump into it. So the two parts of the question, one part is about investing in the investments in the decentralized AI, and the other part was around decentralized AI as a concept and like the technology. Those are the two parts of the question.
Yes, give your thoughts on, do you think decentralized AI is the path forward?
Okay, so first part on investing, easy question, everybody, super easy. How many traditional investments can we make into a purely AI company right now? Maybe private equity, maybe you have some debt financing. There really isn't any direct. It's diversified, right? You can invest in Google, invest in NVIDIA. There's other organizations that are part of this very large supply chain, everything from electricity, pure power, all the way to computation, through to hardware, through to creating AI inference machines or AI inference models. And then finally where we are right now with more value-added goods on top of that with ventures. But it's not really anything that's purely available, very easily to invest into. But then when you look at crypto, high liquid, fast-moving, fast-paced market, you can see fundamental correlations between PR and press for that matter as a whole and traditional AI having an absolute impact on the values of other AI, but AI tokens, decentralized AI protocols, because really decentralized is a very big concept. We don't want to define it today, but the decentralized an aspect of the company. It's very rare to find a purely decentralized company, an organization. It's probably aspects and characteristics that are decentralized, or centralization is turned up over centralization. And so you can see a fundamental impact. And I can't really mention any tokens because of some things that I'm not allowed to say, but there are some tokens out there where you look at Sora, when Sora was announced, or when there was a plummet in, let's say, some controversy, you could see a very clear impact on the crypto market, because retail investors, and especially a lot of investors in crypto, what do they want to do? They want to make money, right? They want to try and move with trends and narratives. So they have all this liquidity available to them, and they're like, wow, I really want to invest, but I can't invest into a purely traditional share or investment vehicle. So what do? I go find an AI token that I like, makes sense, I invest into it. And for one reason or another, they have. And so for decentralized AI as an investment, it's not really an opinion, it's more objective fact. People are investing because they want to follow that trend, but they have a lack of accessibility to traditional vehicles to invest in AI. And as well, traditional companies that are in AI are generally diversified in their approach, have a bunch of other business operations, and aren't just pure AI, even without NVIDIA. And then for the element, like, should we even invest into our time into AI technology and decentralized AI technology? Well, it comes down to philosophy, and I like the point of philosophy because there's privacy preservation issues, consented data issues. We all want to customize AI, but the path to getting there is actually quite painful. And there's amazing companies out there like Verida, who's based out of Adelaide. They're creating a privacy layer to allow for consent-based data to be used for customized AI, which is amazing, and it's actually locally to us. But the problem there is it takes a lot of people in this village to create a very, very strong community. And decentralized AI will only ever last if people are putting more money into the different sections, everything from distributed computation, self-governance procedures, even the token standards themselves. So I think the technology space is really amazing. You can access a significant amount of computation, capital, human resources, and even capital and intelligence, but it takes a lot of effort to get there in the first place. So I recommend people just doing basic correlation, like fundamental correlations between press releases retrospectively. Maybe someone will make a machine learning model on this, be pretty cool. But that's really the kind of thing I've seen personally from my own view, working at SingularityNet and working in decentralized AI and crypto as a whole for a while.
Personally, I believe open source will solve a lot of the problems that people think decentralization will solve for AI. However, given that you do work at SingularityNet, which is one of the earliest projects, Web3 projects or organizations that is building decentralized AI, I am an early investor. I did invest in the ICO back in 2017.
Thank you so much. Paying my salary.
Well, I want to know, what is Singularity's approach going forward? What are you planning on doing so you are part of the race?
Yeah, absolutely. So we have three major pieces that we're launching. This is not a pitch. This is just really what we're doing right now. We have OpenCog, we have Hyperon, and we have Knowledge Layer. So OpenCog is meant to be around AI sentience. Hyperon is meant to be about AI reasoning. And then the Knowledge Layer is about knowledge graphs, so better graph databases, so that when you wrap them together, we should be able to build some level of proto-AGI. And just for everyone's knowledge, the CEO of the company, Ben Gertzel, he invented the term about 20 or 30 years ago, AGI. And since then has gone on to publish a series of papers. We work heavily in reputation systems, governance systems. We work with everything from governments, through to enterprises, ventures, etc. But not a pitch, just to tell you that like decentralized AI is not just a crazy theoretical idea. It's very actively involved in a myriad of portcos through to other ventures and institutions that are working with us. But like our approach is, if you can't build open and publicly, then you maybe close behind closed doors. And AI that could be developed behind closed doors, like AI is really going to be a public good, and it's going to affect all of us, because if something goes rogue, self-replicating, these challenges, if not mitigated or if not audited properly and openly, then you'll have significant challenges. About 60 to 70% of our code is open source. And as well, we're developing out an AGI or AI-based domain-specific language called MetaMotto in the Atom space. So we're trying to help developers that want to build out in an open area and open source the tools, because right now it's a little bit complicated if you don't have access to those SDKs and etc. and other tooling. Sorry.
So the last theme is decentralized physical infrastructure network. A bit of a mouthful, so we'll just say DPIN for short for now. So early versions of DPIN, you may be familiar with torrenting or peer-to-peer technologies such as LimeWire. I think I might be showing my age when I say that. The difference now is that we have blockchain technology. So we can think of DPIN for compute, data storage, or internet access. Helium was already mentioned before. What are the trends in DPIN that you're seeing?
I'm not starting. I don't know.
Yeah, I'll start.
That are worth investing in.
DPIN is a new narrative that before that was just tokenization, or maybe it was RWAs. We actually are losing count of these. We're creating a lot of new terminologies, unfortunately. But with DPINs, we're trying to access things like IoT devices, right? If you're in insurance and you're making an insurance protocol and you want to do community funding for an insurance protocol, everyone raises the money together, but how do you determine when to pay out the premium, or when to receive premiums and to pay out? Maybe it's going to be on IT, maybe it's going to be on weather, maybe it's going to be on other kind of sophisticated, complex data sources that allow you to actually leverage that. But it's real world. We're actually interacting in this world. We're just using blockchain as the data layer and smart contracts as the programmable contracts to allow you to interact, and obviously automate and pass. Simply.
Yeah, and there's been so many different groups. I think there was one group in Australia that had a project where they wanted to have more sort of bespoke insurance for farmers. So they would have physical sensors on farmland that were detecting for the atmospheric attributes that were material to the insurance contract for the farmer themselves. So things like that, and then the physical sensors are triggering events internally within contracts that determine payouts between the insurer and the farmer. So that there's all of these really super ambitious projects that seems like it's been going for ages. It was probably one of the first areas that I started looking to in crypto. People are trying to build decentralized 5G in the case of Helium. People are trying to build decentralized radio towers in the case of a project like Foam. I mean, they're paving a pretty hard road for themselves, given that GPS works pretty well and 5G works pretty well. So I think and we alluded to this before, for a lot of these projects, the question is going to be what is the key advantage, or what is the key commercial implementation that's actually going to be valuable for enough people that they can justify the business. And there's a lot of probably people that are a lot of froth that people talk about in terms of projects that haven't gotten to that point. So I'm sort of waiting for the other shoe to drop on DPIN, not to be too cynical, but
I'll take a slightly more optimistic approach. But no, I agree with everything. Two projects that I'm excited by, Arweave and Huddle01. So Arweave is kind of a decentralized kind of Dropbox for online storage. And then Huddle01 is trying to create a Zoom or a Microsoft Teams alternative. Why both of those interest me is because they've built an entire kind of miniature economy around incentivizing node operators, providing a really important service that's the backbone of lots of our workday, but also with the recent Microsoft outage that crippled offices around the world, highlighting the fact that actually redundancy and outages and security are actually something that are important. And I'm not saying those projects will fix that completely, but they're a glimpse to what a decentralized and more robust and secure future could look like for that infrastructure?
Yeah, I think there's two ways to look at it in my point of view. There's the investment layer of like, do you buy this? Do you think it'll go up? And then do we actually need this in the world? And there's a lot of stuff that goes up that we don't actually need, and that's my opinion. In the cryptocurrency space, my opinion is there's tens of thousands of solutions to probably about 8 problems we actually have that we need to solve. But that doesn't really change an investment perspective, whether it be AI, DePIN, these things tend to go up because people like the idea and we invest. So, I am personally invested in a DePIN project called Hive Mapper. They basically have a physical mapping device. You drive around and you map as you drive, and you get rewarded through tokens through smart contracts based on the data that you capture, and then they sell that data to places like Google, for example. Does that need to be on a blockchain? Can you just do that without it? Maybe, maybe not. That's what we'll soon find out.
Connect with us on LinkedIn. We'd love to continue the conversation. We'll also be out in the area networking, so we'd love to continue chatting. If you have any questions for the panelists, then feel free to come and approach them. Otherwise, please thank the panelists, and thank you so much to attending today's event.
Thank you. Sure, thanks, Elise. Thanks.
Thank you so much to your panelists for that incredible discussion. And now, ladies and gentlemen, the moment we've all been waiting for is almost here. We're about to start the raffle draw to determine the winner of the exclusive getaway, courtesy of our generous sponsor, Yangaro Resorts, located in the beautiful Funnel Bay, Queensland. But before we announce the lucky winner, let's take a moment to watch this short video showcasing the incredible experience that awaits. And now a member of our team has already conducted the draw, and I have the name of the lucky winner right here. And just a quick reminder, the winner must be present to claim the prize. If not, we'll pick another name. And also all the attendees are included in this draw. So if you have the ticket, you're included. And now let's recap what's included in this incredible prize. It's a 3-night stay in Aqua, Yangaro's premium accommodation, where up to 8 guests can enjoy deluxe king bedrooms with en-suites. The winner will also have complimentary access to the clubhouse, complete with thermal therapies. So without further ado, may I call on the winner, Ian Thompson. Is he here? Ian Thompson. 1, 2, 3. Okay, not here. The next name I will call is Alan Talk. It's not here. Okay. Maybe we'll just draw the names of whoever's in here. Okay, but we have the next name, Mitch Fogarty. And then the next one is Ivan Klianev. Okay, there you go. We have a winner. We have a winner. Congratulations. Can you please come up here on stage? Thank you so much, and there you go. We'd like to extend our heartfelt thanks to all the delegates, presenters, and speakers who joined us today here at the Digital Asset, AI, and Technology Conference. We invite you now to enjoy the drinks and continue networking at the hall. We look forward to seeing you again at our upcoming events. Thank you and have a wonderful evening.